Hello, all my dear students. I hope you all are doing good. So, congratulations, first of all, to all the students who have cleared their CA final exams. Whether you have cleared one group or both the groups, congratulations to all of you. And secondly, all those who haven't cleared, obviously, they will have a doubt regarding what are the changes for your direct tax May 23 exams, November 23 exams, what are the amendments, so on and so forth. So, I have taken a decision that this time, along with an Hindi discussion, I will also be putting amendment on full English also. So Hindi amendments are already been uploaded. So along with that, I'll be also uploading my full English amendments for May 23 students, especially for my South India students. Okay. Before I can start with the amendment, from where we are going to do the amendment, what is the source of the amendment, I would like to tell few things to you all. So please listen very patiently and keenly. Few things which I am trying to tell in the pre-discussion session of this amendment. Okay. As you all know that ICI this time has not brought any particular study material for May 2023 attempt. So ICI is telling you to follow which material? ICAI material which came in October 2021. So ICI is telling you to follow the material of May/November 22. So ICI is telling you to follow this material. Okay. Along with this, ICI has issued one supplementary. And that supplementary covers what? The circulars from 1st November 2022 21 to 31st October 2022. It covers circular of that 1 year plus. This supplementary covers Finance Act 2022 amendments, which is applicable for May 23 and November 23 exams. So if you want to follow ICI material, follow the material which was given for the last attempt and then follow this supplementary. Okay. Now, who has so much time in life? Do all these things. Okay. We do not have so much time in life that will first of all follow the ICI material of 2000 pages and then we'll follow the supplementary of around 280 pages. And that will make our syllabus complete for your May 23 and November 23 attempt. We do not have that much time. Sir, show us a simpler way, a shortcut way, and an easier way. I am showing you. Don't worry. Just follow our books. That's it. The moment you follow our books, our easy notes of around 500 pages approximately, that covers the entire syllabus except few topics like house property, salary, which is not important for CA final. That covers all the Finance Act 2022 amendment. It covers the entire syllabus in a colored form. ICI booklet is in black and white. Secondly, it covers all the Finance Act 2022 amendment separately mentioned in green color so that you can identify this is an amendment. And third one, it covers all the circulars and notifications. All circulars notifications till 31st October 2022. So if you are giving exams in May 2023 for your attempt, all the circulars which came 6 months prior to the date of exam, that is till 31st October 2022, are applicable, and our book, our easy notes of 2 volumes of total approximately 250 pages plus 250 pages, approximately 500 pages, covers the entire syllabus almost. Entire syllabus. Entire syllabus will not include few topics as I have told you like salary, house property. Apart from that, and everything is there in the book. Okay. So that's it. One last thing I would like to say before we can start with the session, and that is pay absolute attention. This amendment is not relevant, is not required to be seen, is not relevant is the wrong word, is not required to be seen by those students who have already enrolled my batch, my regular batch or my fast track batch of May/November 23 attempt. All those who are already doing this batch or has already done this batch, including students who have enrolled in now CAR, you are not supposed to see this amendment. We have done all these amendments in the class itself, don't worry, except 3-4 circulars which are very recently come after the batch was recorded. So that I will be doing separately. I'll be sending you all the lectures in your Google Drive itself. That's a matter of half an hour, not more than that. You're not supposed to see this amendment session of 8 to 10 hours. This amendment session will be of 8 to 10 hours. All of these are already covered in your respective batch. So this amendment session is mainly for those students who have done DT as per last year, or who have done DT as per Finance Act 2021, who have given exams in November 2022, and unfortunately they haven't cleared their exams, and now they are about to give their exams in May 23 or November 23, as the case may be. So it is relevant for them. So this is a bridge program. Bridge program, how it is a bridge program? It is going to bridge you from your November 22 attempt to May 23 attempt. So if you have already done your May 23 attempt classes as per May 23 books, as per May 23 syllabus, you're not supposed to see all those things. It's a repetition. Still, if you want to see, you can see. It's your choice. Okay. If you want to see for your further upgradation of knowledge, you can see that. It's okay. There's no harm in if you have time. But I don't think so you have time. Okay. Focus on other subjects. Okay. Rather than only studying about direct tax all the time. One last thing, from where we are going to do the amendments. We are going to do the amendments from our easy notes, which we have finally launched in the market for sale. It is available on our website aarishkhan.com. You can go over there and you can just book the books from there. Okay. So there are so many students since last 1 year. They have been asking me again and again, sir, when are you launching your books? When are you launching your books? We want to purchase your book. So finally, when I felt that my book is a complete book, when I felt that it can be given to the students in the form of hard copy, so now I am ready for it. So we have already launched this around a month back. Okay. And we have got a great response from the students so far. So we'll be doing the entire syllabus, the amendment from this booklet itself. Okay. So now, without wasting any further time, let's start with the amendment. So amendment will be on different pages because this is the complete book. There are 2 volumes. We'll try to complete the first volume in today's session, and then we'll see in the next session what has to be done. The first amendment which is over here is there in the chapter of PGBP. Okay. So the first amendment is there in the chapter of PGBP on page in section 35, that is scientific research section. Okay. Now that amendment is there on page number 4.3. If you come to page number 4.3, I request you all to first of all order the books, and then only you can go through the amendment, and that will make more sense to you all. Okay. You can watch the amendment with me also, because I will be showing all the amendments on the board also, and you can take a photograph of those amendments also if you want. Okay. That also you can do if you don't want to waste your time. And then whenever the books will come, you can just continue studying from the books. Now pay attention, please. The first thing which we have to see over here is, this is an amendment which is in relation to something which was made in the last year. Let me tell you what is this amendment all about. Pay attention, please. Suppose there is a donor over here and there is a donee over here, and the donee is registered in section 35(1)(2), which is a scientific research association, or 35(1)(3), which is an association engaged in statistical research or social science, or 35(1)(2)(a), which is an Indian company engaged in scientific research. So if the donor is giving donation to them, okay, so here the government in the last year has made an amendment that donee has to do 2 things. Donee, the government has put 2 responsibility on donee in the last year. Responsibility number 1, donee has to file a statement with the government every year. The donee has to file the statement with the government every year that who all have given the donation. And second, the donee has to give a certificate, to the donor that this much is the amount which is donated by the donor. If the donee does not do these 2 things, then the donee will be liable for a fee under 234G, consequence number 1, and the donee will also be liable for a penalty under section 271. That is mentioned over here, 271K. Okay. How much fee? How much penalty? Let's see. This is not an amendment. This is the amendment which was made in the last year. So the donee has to pay a fee of 200 rupees per day if it fails to deliver the statement or if it fails to give a certificate. So they have to be liable for this particular fee of 200 rupees per day till the time they do not make their default clear, till the time they do not file the statement, till the time they do not give the certificate to the donor. Secondly, donee is also liable for a penalty under 271K of 10,000 rupees to 1 lakh rupees, which will be imposed by the assessing officer. So there are two consequences which the donee has to bear. But now the Finance Act 2022 has become further strict. And now the Finance Act 2022 has said that if the donee does not file the statement or if the donee does not file the certificate, then obviously these two implications donee has to bear. But along with that, the deduction to the donor of donation will also be what? Will also be disallowed. So now filing of this statement and giving this certificate is equally important to the donor, because in the hands of donor, the government is now saying that we will disallow the deduction also of the donation. So now there is a dual consequences which two people have to bear. One, donee is already bearing. Second, the donor will also have to bear because of the mistake of the donee. Okay. So this is what the first amendment is made by Finance Act 2022. You can come to page number 4.3 and you can check this particular line over here. I'll just read it for you. Section 35(1)(a) has been amended with effect from AY 21-22 to provide that deduction claimed by the donor. What? Deduction claimed by the donor with respect to donation given to any research association, university, college or other institution referred to in these three sections shall be disallowed. Why? Unless such research association, university, college or company files the statement. The first responsibility is for them to file the statement, and second responsibility, they have to furnish the certificate. So now there is a dual consequence. Donee is already bearing the consequence since last year. Now from this year onwards, even the donor has to face the disallowance under the income tax law. It means his donation has been wasted now. It's of no use. It is disallowed forever. Check it once. Then we'll go ahead with the next one. Okay. So let's move on to the next amendment, which is made in section 37(1), general deduction after years and years and years. This deduction, this section has been amended after years and years. Last amendment in this section was made in 2014. So after approximately 8 years, the government has made an amendment. Now what is the amendment? The government has not made one amendment over here. The government has in fact made 3 amendments over here. I'll explain you all of them. Okay. With the help of the examples. You all know that in section 37(1), there is one explanation. Explanation 1 to 37(1). Which says that if you incur any expense for an offense or which is prohibited by any law, then that expenditure will be disallowed. Do you know that or not? So this is an explanation which is there in section 37(1) in the form of explanation 1 to 37(1). I'll again repeat the explanation. If an assessee incurs an expenditure which is an offense or which is prohibited by any law, then that expenditure will be disallowed. So now there was a lot of question regarding any law. Prohibited by any law means which law? Indian law or outside India law or both. So now the Government of India in Finance Act 2022 has clarified that any law will include both Indian law also and outside law also. If you incur any expenditure which is an offense or which is prohibited by an Indian law or which is even prohibited by a foreign law, in both the cases the expenditure will be disallowed. This is the first amendment which is made by Finance Act 2022. Let's see that. Amendment made by Finance Act 2022. Explanation 3 has been added. Provides that expenditure incurred by an assessee for any purpose which is an offense or which is prohibited by law shall include and shall be deemed to have always included. What? Shall include. listen carefully, shall include and shall be deemed to have always included the expenditure incurred by an assessee for any purpose which is an offence under or which is prohibited by any law for the time being in force, and this is the amendment, in India or outside India, both will be covered. If you incur any expenditure which is prohibited by an Indian law, that expenditure will be disallowed, along with if you incur any expenditure which is prohibited by a foreign law, that will also be disallowed. So very important amendment for exam. Okay, be very careful about it. Okay, now the second amendment. What is the second amendment? I'll give you the background of each and every amendment so that you understand everything very precisely. In 2012, CBDT has came up with a circular. Now it's a long drawn history. Now let me explain you the entire history. What was the circular? The circular was targeting the pharma companies. As you all know that there is a pharma company and there is a doctor over here or hospital over here. And we all know that we have learned in the respective batches of direct tax earlier that pharma companies are engaged in providing what? Freebies. Freebies to doctors. That if you sell our medicine, then we will give you this much benefit. If you sell our medicine, then we will give you a foreign tour. If you sell our medicine, the moment I took the name of doctor, I started coughing. Doctors have just tried to remember me. They are calling me. Just a second. So there are pharma companies who says to doctor, we all know that this is an accepted fact across the country, across the world in fact, that pharma companies give lot of freebies to the doctors, to the hospitals to sell their medicines. Now the Indian Medical Council Act has said that it is not allowed. Such doctors and such hospitals should not accept such things. They are not allowed to accept such things. They should not accept such things. It is not allowed. Till they accept. Till they accept. What are the freebies that they accept? They accept foreign tours. They accept expensive gift like iPhones, MacBook, gold, jewelry, etc. But it is not allowed. Indian Medical Council Act has prohibited that to the doctors to accept that. Till they give. So CBDT came up with a circular and said that if you give such freebies, then that freebie expenditure will be disallowed in your hand. Will be disallowed in your hand. So CBDT came up with a circular. And this circular says that such expenditure will be what? It will be disallowed. But it's a circular. It's not binding on assessee. Always remember that. A CBDT circular is never binding on assessee. It's binding on the income tax authority. So people started challenging this circular. And people started filing petition in different high courts in the country. And there are different opinions given by different high courts. So some high courts are saying that it is not allowed. Some high courts are saying that it is allowed. Some are saying it is allowed. Some are saying it is not allowed. So therefore, the government of India did what? The government of India said that we don't want inconsistency across the country. And therefore, the government of India came with an amendment made by Finance Act 2022. So let's see that amendment now. Come to this page, all of you. So the government finally made an amendment in the law. They made a change in the law. A circular is not a law. A circular is just a clarification. It is never binding on assessee. Assessee can just tear the circular and throw in front of the government. It's not binding on assessee. Circular is binding on income tax authority. Assessee can always challenge a circular. CBDT does not have the power to disallow expenses to a circular. Yeah. Yes, they can give a clarification. But that clarification is not binding on everyone. Binding on department. So the government came up with an amendment. Let's see. To provide any benefit or perquisite in whatever form to a person, whether or not carrying on a business or exercising a profession, and acceptance of such benefit or perquisite by such person is in violation of what? Acceptance is in violation of Indian Medical Council or rule or regulation or guidelines as the case may be for the time being in force governing the conduct of such person. So if you give any freebie to any person, if you give any benefit to any person, if you give any perquisite to any person, listen carefully. And acceptance of that benefit, acceptance of that perquisite by the other person is in violation of any law, then that expenditure will not be allowed in my hands. So the hint is towards whom? The hint is towards the pharma company. They are not mentioning pharma company over here, but they have made this amendment for pharma company only. So what this point number B wants to say, if you give any benefit or perquisite to anybody, and if acceptance of that benefit or perquisite by the other person is prohibited by law, it's violation of law, then that benefit or perquisite which you are giving out of your pocket will not be allowed to you as a deduction. We are sorry. Okay. So this is the second amendment made by the Finance Act 2022 in explanation 1 to 37.1. Okay. Now the third one. Pay attention. Suppose if you break any law, okay, and if the law says that you will be prosecuted, you will be put in jail. So to avoid that, there are certain provisions in the law which says that you can compound the offense. Compounding the offense means you can pay a hefty penalty, and then your jail will be what? Avoided. Your prosecution will be avoided. So suppose you have broken some law and the government has come to handcuff you, to put you in jail. So you can say, don't put me in jail. I'm ready to pay a hefty fee. I'm ready to pay a compounding fee. Please don't put me in jail. Instead of putting me in the jail, take a compounding fee from me. The question is, this compounding fee which he is paying, whether this will be allowed or not. So there were a lot of disparity across the country about that also. Some courts were saying it is allowed. Some courts were saying it is not allowed. Secondly, compounding of which law, Indian law, foreign law, that was also not clarified. So finally the government came up with an amendment in point number C, that if you pay any expenditure to compound an offense under any law, that is not allowed. For that, whether that law is an Indian law or outside Indian law, if you pay a penalty to compound any offense under the Indian law, that is not allowed. If you pay any fee to compound an offense under the foreign law, that is also not allowed. Check over here. So these are the three amendments which are made by Finance Act 2022 in explanation 1 to 37.1, and this is a very, very, very important amendment for your exams of May 23 and November 23. You can definitely expect some kind of adjustments with respect to these amendments in your PGBP question, and we all know that the first question in the exam is a PGBP question, whereby they will test you some adjustments with respect to these amendments. So I'll just repeat all three of them. First one is, if you break any law means Indian law or foreign law, you will not be allowed the expenditure. Secondly, if you give any benefit or perquisite to any person for whom that taking of that benefit or perquisite is prohibited, then that benefit and perquisite which is provided by you will not be allowed as deduction. And the third one, if you pay any amount as a fee to compound an offense, then that is not allowed as a deduction, whether that compounding is done for an Indian law or whether for a foreign law, both of them will be disallowed. Just check this once and then we'll move ahead with the next amendment. So the next amendment is with respect to this small section 48.2, income tax is disallowed. We all know that income tax is disallowed, but there are a lot of again disparity across the country whether this income tax will include surcharge and cess or not, and whether surcharge and cess will also be disallowed or it will be allowed. So there were so many high courts which used to say that income tax does not include surcharge and cess, and therefore surcharge and cess was allowed by certain high courts. We all know that income tax has three components. First is the basic tax, then surcharge might be imposed on that depending upon the income of the person, and then cess will be imposed on that. So there is no clarity in the law, because in the law in section 40 clause A sub clause 2 only income tax is mentioned. Surcharge and cess word is not mentioned. So finally the government of India came up with a clarification in Finance Act 2022 where they have said that the term tax shall include shall include the term tax, shall include what? Surcharge, cess, by whatever name called. So now what is the ultimate answer for us in Finance Act 2022? Now there is no disparity, there is no dispute. Income tax will include the basic tax, will include surcharge if any, and will also include cess. Now there is also one related amendment which is done. We will be doing that later on. Just write down over here, related amendment which is done under section 155 subsection 18. So this is related to this particular amendment. So whenever we'll be doing 155 subsection 18, we'll be doing one question also on 155 subsection 18. Don't worry, to explain you exactly what this amendment is all about. Okay, so just go through it and then we'll go ahead with the next one. So the next amendment is in section 43B, which is again a very important amendment for exam, which is made over here. Now let me give you a brief background of this amendment also. I'll give you a brief background of section 43B amendment. Suppose you have taken a loan from someone. Okay, this is your balance sheet. And there is an outstanding interest, say of 1000 crore rupees. Do you remember that there was already a provision in the law which says that if you convert this outstanding interest into a new loan, conversion of this outstanding interest into a new loan does not amount to actual payment. Do you remember this or not? If you convert this outstanding interest into a new loan, it will not be allowed as a deduction because that does not amount to actual payment. It is just a conversion. It is just a change of positioning in the balance sheet. Conversion of an outstanding interest into a new loan does not amount to actual payment. This is something, this amendment was made in 2006. But then government said that yes, whenever this new loan is repaid, at that time we will give you what? We will allow the deduction. Okay. And the government made what? A specific amendment in the law by saying this, that it is clarified that deduction of interest is available only if it is paid and not if it is just converted into a new loan. So conversion of outstanding interest into a new loan is not allowed. Put an emphasis on the word loan. What is written in the law? Conversion of outstanding interest into a new loan is not allowed. When you actually repay the loan, we will allow you. So people start misinterpreting it and people saying that okay, then we will convert the outstanding interest into a debenture. We will not convert that into a new loan, or we will convert that into a bond. We will not convert that into what? A new loan. Because law says what? Conversion of outstanding interest into a new loan is not allowed. Now, the law does not say that conversion of outstanding interest into a debenture is not allowed. The law does not say conversion of outstanding interest into a bond is not allowed. The law does not say conversion of outstanding interest into a new security is not allowed. The law is using the word loan. We are not converting the outstanding interest into a new loan. We are converting the outstanding interest into a security like debenture or bonds. So the Supreme Court said in the case of Aqua Technologies, yes, this is allowed. You might have done this particular case law in your November 2022 exams. The Supreme Court allowed that. The government of India cannot digest this particular judgment of Supreme Court. So the government came up with an amendment in Finance Act 2022 and said that now conversion of an interest payable into debenture not allowed, into any other instrument by which liability to pay is deferred to a future date shall not be deemed to have been actually allowed. So now if you convert, what is the ultimate conclusion now? If you convert an outstanding interest into a new loan, not allowed. If you convert an outstanding interest into a new debenture, not allowed. Because mere conversion does not mean that you have paid to the bank or to the customer. So therefore, this is not allowed. So now, this can also be an important adjustment in your PGBP question. Be very careful with these adjustments. They are going to come in the exams, where ICI will test you on these aspects. Now, be very careful about it. Conversion of an outstanding interest into a new loan, not allowed since very beginning, since 2006. Now conversion of an outstanding interest into a debenture is also not allowed. Yes, whenever that money of debenture will be paid to the customers, at that time we will allow you the deduction. The way whenever you repay the loan, we will allow you the deduction. Similarly, whenever the debentures will be redeemed, at that time when you will pay from your pocket to the other person, at that time we will allow you. So this is what a very important amendment is all about. Just go through it. This amendment was made with an objective of overriding the Supreme Court judgment of Aqua Technologies Limited. Okay, you can go, and therefore that judgment of Aqua Technologies Limited is now no more relevant. That is irrelevant because that judgment is overridden now. Just go through it now, then we'll go ahead with the next one. Okay. So the next amendment is in chapter number 8, which is there in section 14A. Section 14A, there is a very small amendment over here, which is in the form of a confirmation of a circular. Now we have done this circular earlier in the class. So I'll just explain you the circular first of all. So the government has given a clarification that now this circular is officially a part of law. What is this circular all about? For example, this is financial year 21-22 and I have taken a loan. I have taken a 10% loan of 10 lakhs. Now, in the current year, I have not earned any exempt income, but I have to incur interest expense, right? Because the loan has been taken, so the interest meter will start. But in the current year, there is no exempt income. The exempt income I will be earning in future year. In 22-23, I am earning an exempt income. Okay. So the question is, in the current year, when I am incurring the expense, in that year there is no exempt income. The exempt income is in the future year. So whether this interest in expenses will be disallowed or not, because in the current year there is no corresponding exempt income. So in 2014, CBDT came up with a circular and said that yes, it is disallowed. What has to be seen is that you are incurring an expense for an income which is exempt under this act. It should not be exempt under this year. The words used by the law in 14A is any expenditure which is incurred by an assessee for earning an income which is exempt under this act, then that expenditure will be disallowed. That income need not be, that exempt income need not be earned in the current financial year. It may be earned in the future financial year. So if you know that you are incurring an expense, if you are aware that you are incurring an expense for an income which is exempt, whether in the current year or future year, it doesn't matter. The expenditure shall be disallowed. So CBDT came up with a circular. Again, the circular are never binding on assessee. So people have started raising question on the circular. People started filing petitions in the High Court against the circulars of CBDT. So finally, in Finance Act 2022, the CBDT said that we are making this circular as what? As a part of the income tax law. You can check this over here. With effect from 1st April 2022, the above circular is clarified through the Income Tax Act itself. This circular is now a part of the law. Now, nobody in this country can challenge this particular circular because now it is no more a circular. It's a part of Income Tax Act, Section 14A. Okay. You can just go through it once, then we'll move ahead with the next one. So, where is it? It is there in chapter number 8, page number 8.1. Okay. Check it once. So the next is a small amendment in the change in the tax rates in the chapter of taxation of various entities for cooperative societies. What was the tax? There is only a minor change in the surcharge of cooperative society. For cooperative society, what was the surcharge earlier? Earlier surcharge was how much? If their total income exceeds 1 crore rupees, then they have to pay a surcharge of 12%. Okay. But now the amendment has been made in their surcharge, and now their surcharge is exactly similar to a domestic company. Exactly similar to domestic. So what is the surcharge which is applicable to a domestic company? That if their total income exceeds 1 crore but up to 10 crore, then they are liable for a surcharge of 7%. And if their total income is exceeding 10 crore, then they are liable for a surcharge of 12%. This is exactly now they are mapping with what? With the surcharge which is applicable for a domestic company. So, okay. So, there is a relaxation. You can say this is a relaxation. Earlier between 1 crore to 10 crore. Also, they used to pay surcharge of 12%, but now between 1 crore to 10 crore, they are paying a slightly lower surcharge of only 7%. Okay. So, this is what this small amendment is over here. Just go through it and then we'll move ahead with the next one. This is the amendment. Okay. Greater than 1 crore, 7%. Greater than 10 crore, 12%. Okay. So the next amendment is in the chapter of assessment procedure in 143 subsection 3, page number 13.5. There are some minor changes in the proviso to 143.3. It will require some time to understand this now. Whether you have learned this earlier in a detail or not, I don't know. If you have learned this earlier in detail, you'll be understanding it faster, or else it will take time. Pay attention, please. I'm just highlighting few sections. 1, 2, 3, 4, 5, 6, 7, 8. I am highlighting all of them in yellow. Okay. And I am highlighting one section in orange. Now what used to happen this? All these yellow sections were under first proviso. And this orange one was under some other proviso. Okay. So now the government has done realignment of the provision. Earlier, these four yellow provisions, 1023C, clause 4, clause 5, clause 6, clause 6A, all of them were under the first provision. Now the government has segregated them and they have divided them into two parts. Now, let me show you what exactly they have done. Pay attention, please, all of you. What used to happen earlier? I have to explain you with the help of a chart. And what they have done now. Earlier, there were two provisos. First, second. In first proviso, there were how many sections? 10, 21, 22B, 23A, 23B. 10, 21, 10. I also forget that. 22B, 10, 23A, and 10, 23B. Along with this, earlier, there were four more sections: 1023C, clause 4, clause 5, clause 6, and clause 6A. So total there were how many sections? 8 sections earlier in the first proviso. And in the second proviso, how many sections? Only one, section 11. That is, which are registered under 12AB. Trust which are registered under 12AB. Okay, now they have done realignment. Now in first proviso and second proviso, these 4 sections are there in the first proviso. Okay, so I am copying this and I am writing this over here. But these 4 have been shifted to the second proviso. So I will write this over here. And along with this, obviously, in the second proviso, section 11 and 12AB, the trust assessees are also there. Okay. So they have done this realignment. Now, along with that realignment, what is the provision now? Now, let me explain you the provision. Under these 4 sections, now the realignment is done now. Now, I am not interested in the old one. I am interested in the new one. Under these alignments, listen carefully. Listen carefully. When AO is doing the assessment, these assessees, I am talking about the first proviso, not about the second one. I am talking about the first one now. Under these sections, the assessee is getting great exemptions, but exemptions are subject to certain conditions notified by central government. And they have to fulfill those conditions which are mentioned in the notification. So now, if the AO finds any violation in the notification mentioned by the central government, so where are the conditions mentioned? The conditions are mentioned in the notification of central government. Okay. Be very careful with this point also. So who will see whether the conditions are followed by the assessee or not? Subject to which exemption is given under 1021, 1022B, 1023A, 1023B. It is the AO who is going to see the things. The AO is going to comply with the conditions. He is going to check whether the assessee is complying with the conditions or not. Suppose the AO is doing the assessments of these 4 assessees, and he finds some violation in the conditions which are mentioned in the notification of central government, then he suo motu cannot disallow the exemption. What is he supposed to do? This is something which I have told you in the class also. What is he supposed to do? He has to intimate that defect, that violation to the central government. And then central government will cancel the notification, will withdraw the approval of these associations. And then they will intimate the assessing officer, and then assessing officer will accordingly do what? will accordingly disallow the exemption. Moral of the story, assessing officer suo motu does not have the power to disallow the exemption. So there are few very minute points which are mentioned over here. What are these assessees getting benefit? They are getting great exemptions. Why are they getting exemption? Because they are fulfilling certain conditions notified by central government in a notification. Are the conditions mentioned in the income tax law? No, no, no. The conditions are mentioned in the not in the income tax law, but in a central government notification. Who will confirm whether the conditions are fulfilled or not? AO. What if the conditions are not fulfilled? AO will not disallow the exemption. He will intimate that defect to the central government. Central government or the prescribed authority will cancel the notification, will withdraw the approval, will intimate the AO. Then AO can disallow. AO suo motu cannot disallow. Now, what is happening in the second proviso now? In case of these sections, here, first of all, the government has given the conditions as what? As specified violations. And the word specified violation is now defined in Finance Act 2022. Earlier it was not defined. So where it is defined? It is defined in the chapter of trust. We will be doing that specified violation definition later on in the chapter of trust. So the government has defined specified violation in the chapter of trust. So here, if the AO finds any specified violation done by a trust which is registered under 12AB or an institution or association which is registered under 1023C, clause 4, clause 5, clause 6 or clause 6A, then what the AO will do? Then the AO will not tell central government. Now in this case, the AO will tell the Commissioner of Income Tax. And then Commissioner of Income Tax will withdraw the approval and then accordingly they can disallow the exemption. I will tell you the difference between the two. In the first proviso, where are the conditions mentioned? In a notification. In the second proviso, the violations are mentioned in the Income Tax Act itself. In the first proviso, AO will tell whom? AO will tell the central government or prescribed authority. In the second proviso, AO will tell the Commissioner of Income Tax to withdraw the registration of the assessee of 12AB and 1023C. So these are some of the differences. If you want, you can take a photograph of this if you want. This will just try to recall you all. Okay. I'll just show you where exactly the provision is now. Now we will read both the provisions if you want. What is given in the first proviso? If AO wants to disallow exemption under 1021, 1022B, 1023A, 1023B, then the AO must intimate the violation of the conditions by such institution to central government prescribed authority. And the central government or prescribed authority will rescind the notification, will withdraw the approval, and then only AO can disallow such exemption. The AO suo motu cannot disallow the exemption without intimating central government or prescribed authority. Okay. Secondly, where AO is satisfied that any fund or institution under 1023C or section 11 has committed any specified violation, you can write over here, refer. It's already written, refer the chapter of trust later on. You may not write. Then he shall send a reference to the principal Commissioner of Income Tax or Commissioner of Income Tax to withdraw the registration. So the difference is what? Here the AO was telling the central government. Here the AO is telling the Commissioner of Income Tax. Then the AO shall pass the order after giving effect to such withdrawal. Okay. So the specified violation definition, don't worry, we'll be looking at the definition later on whenever we'll be doing the chapter of taxation of trust. Okay. So just go through it once and then we'll move ahead with the next one. Okay. Now the next amendment is in section 144. There is a mention of a new section 139(8)(a) over here, which is a concept of updated return. Obviously, you will not understand this right now unless and until we are done with this concept. So right now, I am not speaking much about it, but yes, there is an insertion of a new section over here along with 139.1, 139.4, 139.5. Now there is a mention of 139(8)(a) also. You can just check this over here. So we'll be doing this after what? Some lectures. Maybe in the next 1 or 2 lectures, I'll be discussing this particular issue also. Don't worry. Just check it once and then we'll go ahead with the next one. So the next amendment is in the chapter of Income Tax Authority and their powers. And there is one very small amendment which is given on page number 14.5. You can check over here. That is, there is some change in the powers of CBDT. As you all should know that CBDT has power under section 119 to issue circulars, to issue orders, to give you relaxation in many sections. Like every year, they give you relaxation from what? Filing of income tax return. They extend the due date. So they have the power to relax that. So they have the power to relax the SSC, to give the SSC the benefit of relaxation under various provisions, like under 115P, under 115S, under 139, which they consider as their national duty, and every year they extend the due date. Under 211, 234A, B, C, they can waive your interest under 234A, B, C. Under 234E, under 270A, that is, they can waive your penalty also by issuing a circular or an order or an instruction. So in this, there is an addition of one more section to this family, and that is 234F. So now, along with all these sections, the CBDT also has the power to give you relief under section 234F. What is 234F? 234F is nothing but fee for late filing of return, which is of 1,000 rupees in some case and 5,000 rupees in some case. So now the CBDT can also relax the fee which is liable to be paid under 234F, which is mentioned over here. Just check it once. Okay. So next amendment is in the chapter of search and seizure, which is on page number 15.3. A very small amendment over here. There is a change of some sections. Earlier it was mentioned over here 153A. Now 153A is not relevant. 153A section, which is search and seizure assessment, is irrelevant from 1st April 2021. You all know that search and seizure is a part of income escaping assessment only in 147. So now the government has removed that, and in place of that, the government has mentioned three sections: the regular assessment also, the best judgment assessment also, and the income escaping assessment also. So the time limit for retention of books of accounts by the department for all three assessment will be same now, like 30 days. Within 30 days from the end of the assessment, once the assessment completes, after that within 30 days the department has to return the books of accounts. So earlier this provision was applicable to only search and seizure assessment, but now Finance Act 2022 has made an amendment, and now it has clarified that this provision is applicable to all assessments. Whether it is a regular assessment, best judgment assessment, or 147 assessment, the time limit and the constraints mentioned in this section are applicable to all the assessments under the income tax law. So just check it once over here. A similar amendment is made over here also in 132B. Here also earlier there was a mention of 153A. So 153A is not relevant anymore now from Finance Act 2021 onwards, because from 1st April 2021, 153A is discontinued. So the government has removed the word assessment under 153A, and they have put the word only assessment or reassessment, which will include all the assessments. So they are not mentioning what? The assessment under 153A. Rather, they are removing the word assessment under 153 and they are putting just assessment or reassessment. That's what they are trying to clarify over here. Just check it over here. Not very important for exam. It is not a very important academic adjustment amendment. Okay. Just go through it once, then we'll move ahead with the next one. Now the next is the amendment in section 147, and they have made drastic amendments in 147. Now you would say as a student, sir, in last year only they have made drastic amendment in 147. So again they have made drastic amendment in 147. Yes. We all know that in last year they have revamped 147, they have removed search and seizure assessment, and they have brought 147 as a separate section which includes search and seizure, survey, everything. But you can see that it has been amended once again. So many amendments. See. Here also amendment. Here also amendment. New section introduced. Again amendment. So what I'll do is, if I start to teach you what was to happen earlier and what is the amendment, what I'll do, I'll teach you this chapter entirely till here. Till where? Till here. Not after this. After this it is not required, because after this there is no amendment. Okay. There's no amendment after this. So I'll be putting a separate lecture on this 147 assessment separately. Okay. So I'm not doing anything on that as of now. I'll be putting a separate lecture which will be explaining you all the amendments from the very scratch. In fact, the entire lecture will be there explaining 147 in detail from the very basics till here. Okay, so we'll be doing that as a separate lecture. So I'm not doing that in today's lecture as of now. Okay, just check here and then we'll move ahead with the next one. So the next amendment is in the chapter of appeal, which is on page number 18.7. They have brought a new substituted section 158AB. 158AB was there earlier also, but they have removed that section and they have brought a new section now. So I am in a fresh section. So I am interested in explaining you the fresh section now. It will take time. And here I have to introduce few people over here. Pay attention, please, all of you. So I am not saying this is the new section. It is a substituted section. Earlier also it was there. They removed the old one. They brought a new one. Now pay attention, please. What exactly this section has to say? Pay attention. Suppose, for that I have to create an entire background now. Suppose there is Mr. A, who is an assessee, and who has filed an appeal to ITAT, or who has filed an appeal to High Court, and the assessee has won the case. Okay. So because the assessee won the case, the department has appealed. Appeal to what? Appeal to High Court or Supreme Court. And we all know that if you appeal to High Court or Supreme Court, it has to be a question of law. Okay. And suppose this is a matter of financial year 18-19. And suppose the matter over here is what? Say it is depreciation. You have to pay absolute attention on each and everything what I am trying to say. So whatever I have said you so far, please pay attention on that first. I'll put this aside. I'll make it slightly smaller. I want a lot of space over here. Suppose previous year 18-19 is going on. Mr. A is an assessee and he has filed a case to ITAT. Obviously in the order of the law. First to CIT appeal, then to ITAT, then High Court, then Supreme Court. And he has won the case in ITAT. So the department is aggrieved. They filed a case in what? Supreme Court. They filed a case in High Court. Or he has won the case in High Court. So department is aggrieved. They filed a case in Supreme Court. And the matter for this year is what? This year is pending in High Court and Supreme Court. Okay, as the case may be. Okay. Okay, now suppose a similar issue has arisen in case of Mr. B. Mr. B, who is Mr. B? He is other person. Other person, he is my friend. For him also a similar thing is happening for 18-19. Similar events happened. For what? For 18-19. What do I mean by similar event? His matter is also depreciation. He has also won the case in ITAT or High Court. In his case also department has appealed in High Court and Supreme Court. And in his case also the appeal is pending. Everything is similar. Okay. Everything is similar. Now suppose a similar issue arises in case of Mr. A in 22-23 also. Similar thing. That the assessee has appealed and the assessee has won the case in ITAT. Now again the department wants to appeal. Now does it make sense to appeal again for 22-23? Because the appeal of 18-19 is already pending in case of assessee. Or a similar matter is already pending in case of some other person. Department is already agitating that particular matter in High Court and Supreme Court. What sense does it make? So for that purpose, the government has made a collegium. Collegium means a group. Collegium of what? It is mentioned over here. Let me give you the entire idea. Collegium of 2 or more chief commissioner or commissioner. Collegium of 2 chief commissioner or etc. Okay, listen carefully. I'll tell you the number of persons will be introduced over here. There will be a lot of persons will be introduced over here. So this similar issue has arisen in 22-23. In case of Mr. A only. In case of Mr. A only. So what sense does it make to again appeal the same matter of depreciation, because already appeal of 18-19 is pending in High Court or Supreme Court. So in this case the government has said that the collegium will tell the CIT. Will tell the CIT that do not appeal. Do not appeal for previous year 22-23. Okay. Then CIT will tell the AO that we are not supposed to appeal. So we'll tell the AO that file an application. file an application with ITAT. With ITAT or High Court within 120 days that we are not appealing. Plus, also take acceptance from Mr. A, assessee. Assessee should also agree to it. Take acceptance from assessee that we are not filing an appeal. We are waiting for the judgment of 1819 in your case, or for judgment of 1819 in your friend's case. And whatever the judgment will come, we'll try to give effect of that. And after that, we'll take a decision whether we want to appeal or we don't want to appeal. Okay. So this is how the unnecessary appeals will be what? Will be avoided. So here, who is going to take the decision whether to appeal or not? The decision will be taken by the collegium. The collegium has been made for that purpose only. The collegium, the duty of the collegium, the duty of the group of 2 commissioner of income tax is to identify those cases where the appeal of similar matter is already pending in High Court or Supreme Court, in my case or in some other case. Don't again and again appeal the same things. What sense does it make to appeal the same thing again and again, again and again? It's a repetition of the same thing, unnecessary repetition. So this is what the government has made the amendment over here. Okay. So now I'll be reading everything with you all with the help of this example. Then you can take a photograph of this if you want. The board will specify a collegium. Collegium means a group comprising of 2 or more chief commissioner or principal commissioner or CID for the purpose of 158 AB. Okay. The collegium is of the opinion that any question of law, that is depreciation matter, arising in case of an assessee for any AY relevant case, that is 2223, is identical with a question of law arising in his case for another AY, that is 1819. So the question of law, that is depreciation matter of 2223, is similar to the depreciation matter of 1819. Or in the case of any other assessee, that is his friend's case for any AY which is pending before jurisdictional high court. Yes, the matter of 1819 is similar to matter of 2223, and the matter of 1819 is already pending in my case or in my friend's case or the Supreme Court against it order of tribunal or high court which is in the favor of assessee, that is other case. The collegium may decide and inform the principal commissioner or commissioner not to file an appeal at this stage. They are not saying don't file appeal ever. At this stage, don't file. Let the High Court and Supreme Court judgment of 1819 come, and then we'll take a decision. To the tribunal, High Court against the order of the Commissioner of Appeal or Tribunal. The principal commissioner on receipt of the communication from the collegium. So the collegium is informing whom? To the commissioner that do not appeal. So what the commissioner will do? The commissioner will direct the AO to make an application to tribunal or High Court in the prescribed form. So the AO will inform the High Court and tribunal that we are not appealing now. And that application shall be made within 120 days from the date of the receipt of the order of Commissioner of Appeal or Tribunal. So within 120 days, you have to make an appeal. Then the application, what will be written in the application? The application which the AO will do to the High Court or to the Tribunal. What will be written in that? The application may state that an appeal on the question of law arising in the relevant case may be filed when the decision on the question of law becomes finals in the case of 1819. So we will take a decision when the judgment of 1819 will come. Till that time we are silent. Till that time we don't want to appeal. At the same time, the commissioner shall direct the AO that also take the approval from the assessee. If the assessee does not give an approval, then you have to file an appeal. The assessee says that no, this matter and that matter is different. This matter is on different issue. That matter is on different issue. 1819 depreciation is a different issue. 2223 depreciation is a different issue. Now, if the assessee does not agree that it is same matter, then the commissioner cannot do anything. Then he will file an appeal. But you have to take one approval from the assessee. The commissioner or the principal commissioner shall direct the assessing officer to make such application only if an acceptance is received from the assessee to the effect that the question of law in the other case is identical to that arising in the relevant case. If no such acceptance is received, if the assessee does not give acceptance, then the commissioner shall proceed with the provisions of appeal, and the provisions of ITAT appeal is given here and High Court appeal is given here. They can accordingly go for an appeal now. Now, what will happen when the final order will come? When the order of the Commissioner of Appeal Tribunal in the relevant case is not in conformity with the final decision in the law in the other case, the Commissioner of Appeal or the Commissioner may direct the AO to appeal the Tribunal or High Court against such order. So, if the final order, whenever the final order will come, okay, the final order is not in conformity with the order of 2020-23, then they can go for an appeal, and they can file an appeal within 60 days to the tribunal or 120 days to the High Court, which is the time limit generally to file an appeal to tribunal and High Court. Time limit to file an appeal to tribunal is 60 days. You can go and check the time limit. The time limit to file an appeal to High Court is 120 days. Okay. 120 days or 60 days as the case may be, on which the order of High Court or Supreme Court in the other case is communicated to the Principal Commissioner. So when the 1819 judgment will come and the department does not agree to that judgment, they can go and appeal. They can go and appeal for 22-23, and as a fresh case they can go and appeal for 22-23 and try to see that whether they can win this case or not. So this is what this provision is all about. You can take a photograph of this. This will help you all to understand what is the reason of this amendment. The reason of this amendment is very simple. The government wants to do what? The government wants to reduce the unnecessary repetitive appeals in case of what? In case of department. Just check it once. Now the next amendment is on page number 18.10, a very small amendment. Pay attention please, all of you. In section 263, where the commission has the power to revise the order of the AO. So now this power has been extended to the commissioner to revise the order of even TPO. So if the commissioner finds that the order passed by the TPO is erroneous and prejudicial to the interest of the revenue, the commissioner has the power to revise what? The order of TPO also. Just check it once over here. Check once. Earlier only AO's order was modified, but now even TPO's order can be modified. Check it once. Okay. And then we'll move ahead with the next one. Now the next amendment is a very small amendment in the chapter of profit link deductions, whereby the government has extended this date by one more year. Earlier in 80 IAC, that is deduction which is available to the eligible startups, the company or LLP should be incorporated from 1st April 2016 to 1st April 2022. Now that has been extended to 1st April 2023, which is on page number 20.4. Check it once. So here the amendment is they have extended by another 1 year. So they have been doing this since last so many years. Earlier it was 2019, then they extended to 20, then 21, then 22, now even 23. Okay, just check it once. So the next amendment is in the chapter of alternate minimum tax. We all know that the alternate minimum tax is 18.5%. And if the assessee has a unit which is located in IFSC and the consideration is received in foreign currency, then it is 9%. We all know that, right? So for normal assessee, it is 18.5%, but for IFSC assessee, it is 9%. But now there is an amendment where the government has relaxed that this 18.5% will be 15% for cooperative society. So for cooperative society, the two rates will be 15% and 9%. And for others, the two rates will be 18.5% and 9%. Just check it once. So for cooperative society, the government has reduced the rate from 18.5% to 15%. So the government is giving a lot of relaxation to cooperative society. For surcharge also there is a relaxation over there. Here in AMT also there is a relaxation. So now what will be the AMT position as of now? Pay attention please. AMT position for cooperative societies. For cooperative society, normal case, it is 15%. And if it is an IFSC case, then 9%. And for others means other than cooperative society, individual, HUF, firm, LLP. Normal case, it will remain at 18.5%. Obviously subject to surcharge as whatever it is. And for IFSC case, it is 9%. So what is the amendment? The amendment is only this much. That is for cooperative society, the normal case, it will be 15% instead of 18.5%. Just check it once and then we'll move ahead with the next one. Or you can take a photograph of this or write down this over here, whatever you want to do. Pause the lecture and write it down. So the next amendment is in the chapter of penalty on page number 23.6. You can come to this page number 23.6, where the amendment is in section 271 AAB. And the government has made two amendments over here. First amendment is the government has mentioned here notice under 148 because the notice under 153A is not relevant from 1st April 2021. You know that or not? Because the search and seizure assessment also, now the notice has to be issued in 148. For search and seizure assessment also from 1st April 2021, the notice is issued under 148. Prior to 2021, for search and seizure assessment, notice was issued under 153A. So they have clearly mentioned. I have also mentioned in the last year that there is a mistake in this particular section. You can check my last year book if you want. In the last year, I have mentioned that there is a mistake in this section. The government should mention over here 148. They should remove 153A. But they have not removed 153A, but they have inserted 148. At least they have made the provision correct now. So this is the first amendment which is there over here. The reason why this has to be inserted, because now the search and seizure assessment is also done under section 148, and this penalty is in respect of search and seizure assessment. It is not for normal assessee. The second amendment which is made over here is made in 3 sections consistently. The amendment is made under 271AB. The amendment is made under 271AC. The amendment is also made in 271AD. In all these 3 sections, the government has made one similar amendment, and that is the power to impose this penalty. Earlier it was only by AO, but now it is also extended to CIT appeal. So this amendment is made in 3 sections. This section, and also this section. So there are 2 amendments which are made over here. Please make a note of it, and then we'll move ahead with the next one. So as just now I have said you that the similar amendment is also made in AAC and AAD. So you can check over here. Here also the government has given the power to CIT appeal along with the AO. This is a section which is with respect to penalty for fake invoice, which came in Finance Act 2020, if you remember. Penalty for fake invoices. Okay. This is also a very recent section only, not a very old, and it's not a very old section. Okay, just check it once. Now the next amendment is on page number 23.9, and it is very important amendment which is there in section 68. Now I'll just explain you what exactly this amendment is all about. Section 68, I'll try to explain you first of all. There was already one amendment which was made in section 68 in Finance Act 2012. So this amendment is an extension to that amendment. The Finance Act 2012 amendment used to say that if there is a closely held company, okay, and this is the balance sheet of a closely held company, and if there is a share application money, or if there is a share capital, listen carefully, then the company has to explain the source of this, that if the shareholders are resident, from where the hell they have got this money. Suppose if the shareholder is Mr. A, a promoter, then it is the duty of the company to explain that from where the hell the shareholder who is a resident. If the shareholder is non-resident, you are not supposed to explain. But if the shareholder is resident, it is the duty of the company, closely held company, to explain the source in the hands of the shareholder also. If the company is not able to explain from where the shareholder has got the money, this amount will become what? Deemed income in the hands of company, and they will be liable for 78% tax under section 115 BBE, which is 60% tax, 25% surcharge, and 4% cess. So what was the provision? The provision was very simple. That if I am a closely held company, and if in my balance sheet there is a share capital, there is a share application money, which obviously I have received from shareholder, then it is the duty of the company to explain the source in the hands of the shareholder also. That from where the hell the shareholders are getting money to invest in your company, if the shareholders are resident. So if I am not able to explain the source in the hands of the shareholder, then the company is under default, and the company will be liable for tax. And also penalty under 271 AAC. Okay. So now there is an extension to this. So the government in Finance Act 2022 made an amendment. The amendment, there is no change in this. This is same. There is an extension. And this extension is for every assessee, not only closely held company, every assessee. This Finance Act 2012 amendment was only for a closely held company, but this one is not for closely held. This is for all assessee. And this says that if there is a balance sheet, and if there is a loan in your balance sheet, there is a borrowing in your balance sheet. Hey, you have taken a loan from Mr. A. Then you have to explain the source in the hands of Mr. A, that from where the hell Mr. A has got the money to give you loan. That if you have a borrowing in your balance sheet, then you have to explain that from where you have borrowed this money, that person has financial credibility or not. So earlier it was only applicable in case of closely held company, but now it is applicable to everyone for loan and borrowing, because loan and borrowing can be taken by any person. Na? Loan and borrowing can be taken by company also, it can be taken by individual also, it can be taken by partnership firm also, LLP also. So now this is a very, very important amendment. Okay, pay attention please. What was the earlier amendment? This was the 2012 amendment. I'll just read that once for you all. Provided that where the assessee is a closely held company and the sum so credited consists of share application money, etc., any explanation offered by such assessee shall be deemed to be not satisfactory unless the person being a resident in whose name such credit is recorded in the books of such company also offers an explanation, that is the shareholder, about the nature and the source of such sum so credited, and the such explanation in the opinion of the assessing officer has found to be satisfactory. Now what is the amendment? The aforesaid provision of 68 have been amended with effect from AY 23-24 to provide that the nature and the source of any sum, whether in the form of circulate, whether in the form of what? Loan or borrowing, whether in the form of what? Loan or borrowing or any other liability credited in the books of accounts of an assessee, shall be treated as explained only if the source of the fund is also explained in the hands of the creditor or the entity provider. Who is the creditor? The person who is giving you the loan is the creditor. So you have to provide the details of that person also. We will ask question to that person also, that is the lender who has given you the loan. And that lender also has to explain from where the hell he has got the money. If the lender is not able to explain, then you are gone. Who will be gone? The borrower will be gone. The borrower will be liable for what? Section 60. So this is the dangerous amendment made by Finance Act 2022. Very important for exam. So these are the finer points which they can ask. Very technical points in the exam to make your paper tough. Anyways, they are making direct tax paper hell lot of tough day by day. So you have to do the subject in depth. Now the next amendment in 271 AAC, as I have told you in 3 sections, they have made similar amendment 271 AAB, AAC, AAD. They have given the power to CIT appeal also, along with what? Along with the assessing officer. So here also they have made this amendment. Okay. Now next, there is one last amendment in the chapter of penalty. Then we'll move on to the next chapter. One last amendment is there in section 272A, whereby earlier, if there is a failure to answer any question to the department, failure to sign any statement, failure to furnish any information or return or statement or allow inspection, the penalty earlier was 100 rupees per day. So now that has been increased to how much? It has been increased to 500 rupees per day. That is the only small amendment which is made over here. So if you do certain defaults which are mentioned in 272A, like I have said you, so there was a penalty of 100 rupees per day. Now there is a penalty of what? 500 rupees per day. That is a very small amendment which is made over here. Just check it once. So the next amendment is on page number 24.2. That is in the chapter of Dispute Resolution Committee. As you all might be knowing, in the last year, the government has brought the concept of Dispute Resolution Committee for certain assessees. If there is an assessee whose returned income is less than equal to 50 lakhs and the variation proposed by AO is less than equal to 10 lakhs, then he has an option to go to Dispute Resolution Committee. Okay, and then Dispute Resolution Committee will do what? Will waive his penalty. Will waive his penalty and prosecution. Will give him immunity from penalty and prosecution. So now suppose there is an assessee whose returned income is less than equal to 50 lakhs, or whose both the conditions have to be fulfilled, and the variation proposed by the AO is less than 10 lakhs. So he's opting for this option. In that case, he has to wait for the order of the DRC. Once the order of the DRC will come, and then the AO will accordingly pass what? His assessment order. So now the question is, in how many days the AO will pass the order after the DRC's order has been passed? So that time limit was missing under the income tax law. So to fill that time limit, the government of India has made an amendment over here on page number 24.2. You can check over here that time limit is, it has to be done within 1 month from the end of the month in which such order is received from the DRC. So whenever the AO will receive the order from the DRC, suppose the order from the DRC is received on the 28th of Feb 2023. Okay, then the AO can pass the order, can complete the order till 31st of March 2023. Okay, so this is what this particular provision is all about, which it wants to say. So there was a time limit which was missing. Once the DRC will pass the order, obviously the AO has to give the effect of that order in his assessment order. So whatever the DRC will pass the order, DRC has the power to what? To reduce your income also. So if the DRC reduces the income, the AO also has to reduce the income. So if the AO is reducing the income, so if the DRC is reducing the income and passing the order for reduction of income, accordingly the AO has to pass the order. Within how much time? That time limit is mentioned over here. Just check it once and then we'll move ahead with the next one. So the next amendment is in a very important section of set off and carry forward, which is section 79, and section 79 is only applicable to a closely held company, which says that if a closely held company wants to carry forward its losses to the next year and set off in the next year, then 51% of the shareholders in the year of loss and in the year in which you want to set off has to be same. Suppose there is a loss in 21-22 and I want to set off in 22-23, then 51% of the shareholder of 21-22 as on the last day of 21-22, that is on 31st March 2022, has to be common with 31st March 2023. So if the 51% shareholders as on the last day of the year of loss and the year in which you set off are not common, are not same, then the loss is lapsed. But then the government has given relaxation in this case to certain companies, like relaxation number 1. To certain companies, this section is not applicable. First, if a company is going to an insolvency and bankruptcy court for revival, then this section is not applicable. So in that case, even if the number of shareholders fall below 51%, it is allowed. You can carry for the loss. Then if a company is going to NCLT, National Company Law Tribunal, for what? For revival, then also this section is not applicable. So now there is one more company which has been added over here. Now who is this company? This company is a strategic disinvestments of a public company into a private player. Like when the government is selling its PSU, as you all might be knowing, the government is selling a lot of PSU to the private players. Why? Because PSUs are under losses. So now if you sell the PSU to private players and there are a lot of losses with the PSU, and if you sell to private players, their 51% shareholders will change, and if their 51% shareholders will change, their losses will be lapsed, because as per section 79, 51% of the shareholders have to be same. So the government has given certain relaxations to disinvestments of PSU. So let's see what kind of relaxation has been given, and it has been given subject to some conditions. The provision of subsection 1, that is section 79(1), shall not apply to an erstwhile public sector company. So it will not apply to a public sector company. Mainly it has been given to Air India, because Air India, this investment has happened last year and it has been given to our Tatas. Subject to the condition that the ultimate holding company of such erstwhile public company immediately after completion of the strategic disinvestment continue to hold directly or through its subsidiary indirectly at least 51% of the voting power of the erstwhile public sector company in aggregate. So what do I mean by this? So to explain this, I have made an example. Suppose this is a PSU which is getting sold. For example, this is Air India. Okay. And which is getting sold to Tata, a private player. So what the government is saying that now, suppose there is an ultimate holding company and there is a subsidiary over here, and there is a subsidiary of subsidiary, and this PSU is a subsidiary of this. So the government is saying that you can sell this PSU to any private player, but directly and indirectly 51% has to be in the hands of the ultimate holding company. You can sell the remaining percentage. So directly and indirectly taking together, suppose directly they have 20% and indirectly they should have 31%. If this is the case, we will allow the loss to carry forward, or else we will not allow the loss to carry forward. The government is saying that the PSU which is getting sold, at least 51% of the voting power has to be held by the ultimate holding company, either directly or indirectly through layers of lot of subsidiary. If that is done, then we will allow the loss to carry forward, otherwise the loss will be lapsed. So if you want to take a photograph of this, you can take this. Otherwise, you will not understand the implication of this particular provision. Okay, you can take a photograph of this. Then we'll move ahead with the next one. Okay. So let's go ahead with the next one. Now, next one is what? Next amendment is again in the chapter of set off and carry forward. For example, there is an assessee, say Mr. A, who has been found with undisclosed income of say 5 crore rupees. Now the government says that you have to pay tax on this. This undisclosed income will be chargeable to tax as per section 68, 69, 69A, 69B, 69D, etc. And there will be 78% tax on it. Now what assessee is saying? Wait. You have found 5 crore na as undisclosed income. I have 4 crore loss kept with me. Loss of earlier year. Please allow me the set off of that, and on balance income you can take tax whatever you want to take. Okay. So what assessee used to do? This undisclosed income which has been found after a lot of efforts of the officer. Assessee has lot of losses kept with him. So assessee is trying to set off what? That loss against this income. So the government of India made a new section 79A, and they said that not allowed. If your undisclosed income is found in search, or if your undisclosed income is found in survey, other than one survey is excluded, other than the TDS and TCS survey which is covered in 133A subsection 2A. You have to learn the provisions in such minute details. So if you are covered by search, if you are covered by survey other than 133A subsection 2A survey, which is a survey done for the compliance of TDS and TCS, any other case, if you are caught with undisclosed income, we will not allow you to set off your losses against this income. Just check this. This is an amendment which is made by Finance Act 2022. Very important one. I'll just read. In section 70 to 80, there are specific provisions relating to set off or carry forward and set off of losses while computing income under various heads and with respect to different classes of person. However, currently there is no provision to disallow claim of set off of losses or unaccounted depreciation against undisclosed income corresponding to difference in stock, undervaluation of stock, unaccounted cash payment, etc., which is detected during the course of search or survey proceedings, blah 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 blah. So they have made an amendment. Here the amendment starts. To disallow the aforesaid adjustment of losses, 79A has been inserted with effect from assessment year 22-23. It provides for the following. Section 79A is applicable notwithstanding anything contained in this act. Second point is important. Section 79A is applicable when there is a search which is initiated, or which is the requisition under 132A, which is also a part of search and seizure only, or there is a survey but other than 133(2)A, which is a TDS or TCS survey. In this case, section 79A is not applicable. The total income includes any undisclosed income if the above conditions are satisfied. What are the conditions? That is, there is a search or there is a survey and the total income includes any undisclosed income. Then the assessee will not be eligible to set off against such undisclosed income any loss, whether brought forward loss and even unabsorbed depreciation. Loss will not be allowed. No loss will be allowed to be set off against such income, nor any unabsorbed depreciation will be allowed to be set off against such income. And what do I mean by undisclosed income? This is similar to what you have done earlier in 271AB. You can check 271AB. It is there over there also. I'll just brief you if you want. It is the same thing. Undisclosed income means an income which is not disclosed by you till the time the search was done or survey was done. Suppose today's the search is done and you have not disclosed that in the books of accounts. So that becomes undisclosed. Suppose today's search is done and yesterday you have disclosed everything. Then that cannot be called as undisclosed income. This is what the definition of undisclosed income is all about over here. You can just go through this provision. This is an important one. Very important for exam. Just go through this and then we'll move ahead with the next one. So let's move ahead with the next chapter where there are some amendments which are made. Not many amendments luckily made in the chapter of TDS now. But there are some amendments which are made in the chapter of TDS. Let's see one by one all of them. Okay. First amendment is made in 194 IA, that is TDS on purchase of immobile property. Now what was the position earlier? What was the position earlier and what is the position now? I'll just explain you with the help of example. Earlier, if you are a buyer and if you purchase an immovable property of a consideration which is greater than or equal to 50 lakh rupees, then you have to deduct TDS at the rate of how much percentage? 1%. Okay. So if the consideration is, say, suppose if the consideration is 75 lakhs, then you have to deduct TDS of 75,000 rupees and pay to the central government before the prescribed time. But now the government has made the amendment. Now what does consideration mean? That was also defined earlier. Okay, even today it is applicable. The consideration includes all the things. The consideration for immovable property shall include all charges of the nature of club membership fee, car parking fee, electricity and water facility fee, maintenance fee, advance fee, any other charges of similar nature which are incidental to the transfer of immovable property. So all these things are part of consideration. Okay. So now the government has said that no, we are not satisfied with this. Now the government says that suppose if the consideration is 55 lakhs, but if the stamp duty value is greater than the consideration, suppose it is 65 lakhs, then you have to deduct TDS on whichever is higher. It means now you have to deduct TDS on higher of the two. So if the stamp duty value is higher, then on stamp duty value. If the consideration is higher, then on consideration. Whichever is higher, you have to deduct TDS on that much amount, 1%. For example, if the consideration is say 55 lakhs and the stamp duty value is 65 lakhs, then you will deduct TDS on 65 lakhs. Suppose if the consideration is 65 lakhs and the stamp duty value is 55 lakhs, then you will deduct TDS on 65 lakhs. Suppose now the twist will come in the story. Suppose one of the amount is less than 50 lakhs. Suppose this is 48 lakhs and this is 52 lakhs. Then whichever is higher, this will be deducted on 52 lakhs. So when this section is not applicable, if both the consideration as well as the stamp duty value is lower than 50 lakhs, then this provision will not be applicable. If one of the amount is greater than or equal to 50 lakhs, even if it is equal to 50 lakhs, because the provision is applicable on 50 lakhs or more. If one of the two, if consideration is greater than or equal to 50 lakhs, or if stamp duty value is greater than or equal to 50 lakhs, if either of the two is greater than or equal to 50 lakhs, you are liable for 194 IA TDS. So be very careful. There is one question which I will be showing you in a while. Before that, you can just see the provision over here. 1% of total consideration or stamp duty value, whichever is higher. Now, when this section is not applicable, where both the sale consideration and stamp duty value both is less than 50 lakhs. If both of them is below 50 lakhs, then 194 IA is not applicable. Just go through it. Till that time, I'll just search the question in the question bank and I'll show you the question also. Okay. So here is the question which is given on page number 32.12 in your question bank. And this is a very comprehensive question bank. It covers all the questions of ICAI. It covers all the RTP. Last 5 attempt RTP from November 20 to November 2022. All RTPs are covered. All mock test papers, last 4 to 5 attempts mock test papers are covered. Last 3 to 4 attempts past exam papers are also suggested answers covered. Everything is given in this particular RTP, in this particular question bank. Okay. So now this is the question where in first case both are less than 50 lakhs, so not applicable. Yes, this is less than 50 lakhs, but this is exactly 50 lakhs. Yes, so you have to deduct TDS on 50 lakhs at 1%. So in the third case, you have to deduct TDS on 51 lakh, and in the fourth case, you have to deduct TDS at 58 lakhs. Just check it once, and then we'll move ahead with the next one. Okay. You can go through the solution below also if you want. Now the next amendment is on page number 28.17. That is over here. There is a note which we used to write in our class. You all might be knowing that there are certain sections under income tax law in which if you are an individual and HUF, then you are liable to deduct TDS only if your last year's business turnover is greater than 1 crore if you are doing business, or if you are into profession, then your professional gross receipt of the last year has to be greater than 50 lakh rupees. then only certain sections are applicable, like 194A, 194C, 194H, 194I, 194J. These are the 5 sections which are only applicable to those assessees whose last year's turnover of business is greater than, if you are individual HUF. If I am a partnership firm, then I don't have to see all these things. Then I have to deduct the TDS. But if I am an individual, if I am an HUF, then there is a relaxation which is given to me. Now, in this section, there are 2 more sections which are added by Finance Act 2022. Now, these are the 2 sections which are added by Finance Act 2022, and ironically, both these sections are newly inserted sections. Both of them are newly inserted sections in which year? In this year only, in Finance Act 2022. So we will be learning about both of them one by one. One we are going to learn in this chapter, one we are going to learn in the chapter of virtual digital asset. Okay. So we'll be doing about both of them. But in these 2 sections also, if the deductor is an individual and HUF, then they are liable to deduct TDS only if the last year's business turnover is greater than 1 crore, or if the last year's profession turnover is greater than 50 lakh rupees. You can just go through it and then we'll move ahead with the next one. Now, the next amendment is on page number 28.28, which I was just speaking about, that there is a newly inserted section 194R, which is applicable from 2022 onwards. So, I'll just explain you the reason of this particular provision. Pay attention, please. Suppose there is Mr. a customer, and there is a seller over here, Mr. B. Okay. Now, Mr. B has suppose sold some raw material to Mr. A, and Mr. A liked it like anything. He loved the raw material, the quality of the raw material, the service given by Mr. B. So, in return, Mr. A is giving some benefit or some perquisite to what? To Mr. B. Say he is giving him an iPhone, or he is giving him 10 lakh rupees cash, or he is giving him, say for example, a foreign trip. So we all know that this is taxable in the hands of Mr. B because it is received in the form of a business benefit. So any benefit or perquisite received in the business or profession, in exercise of a business and profession, is taxable. We all know that. But now the government is going one step ahead and telling Mr. A that if Mr. B is a resident, then when you are giving the benefit to him now, you have to deduct TDS also. So now, the government is not restricting itself to taxability. The government is also putting responsibility on Mr. A to deduct TDS on behalf of Mr. B. So when I am giving a benefit or perquisite, so I have to deduct the TDS. How much percentage? What is the timing of TDS? If I give cash benefit, then how to deduct TDS? If I am giving kind benefit, then how to deduct TDS? All these questions are answered in 194R. So let's see this section one by one, step by step. Let's follow this. Who is responsible for tax deduction? Any person responsible for providing benefit. So the person who is providing any benefit, that is the giver of the benefit, the giver of the perquisite, will be deducting TDS. Any person responsible for providing any benefit or perquisite pertaining to business or profession carried on by deductee is responsible for deducting tax under 194R. But if the deductor is individual HUF, as I have told you, then they are liable to deduct only if the last year's business turnover is greater than 1 crore, or if they are doing profession, then the last year's profession gross receipt has to be greater than 50 lakhs. This is something which I have just told you, that which was mentioned in that note. You remember that? Okay. Now, who is deductee? Who is deductee? Deductee is any resident who gets the aforesaid benefit. So, deductee has to be resident. If the deductee is non-resident, what if the deductee is non-resident? Then deduct TDS in 195, not here. Then 195 may be applicable, not this section. Okay, what is the threshold over here? The threshold is 20,000 rupees. So, when am I supposed to deduct? When the benefit or perquisite in the financial year exceeds 20,000 rupees, only then I am supposed to deduct the TDS. Okay. If the benefit or perquisite is exceeding 20,000 rupees, then I am supposed to deduct TDS. Otherwise, I am not liable to deduct the TDS. Is it clear? I hope it is clear. What is the rate of tax? 10% is the rate of tax. The TDS rate is 10% over here. What if I am giving a benefit to the other person which is in kind? Then how will I deduct TDS? Then you have to deduct TDS. Then you have to follow the same procedure that you follow for lottery. You remember that in case of lottery? If there is a winning in kind, then what am I supposed to do? If I am giving someone a winning in cash of 1 crore rupees, then I will deduct 30% TDS in lottery. But if I am giving in kind a BMW car of 1 crore rupees, then how will I deduct TDS? Then in that case, the government says that the deductor has to ensure that the other person has paid the tax. Only then you have to release the winning, only then you have to release the benefit, only then you have to release the perquisite. So if you are giving the benefit or perquisite in kind to someone, then you have to ask the other person to pay the tax first. Then I will give you the package tour, the tickets of the Europe tour, which I am giving you. First pay the tax, then I will give you iPhone 14 Pro Max. First pay the tax, then I will give you MacBook Pro. Check it here. If, however, the benefit is wholly in kind or partly in cash, partly in kind, but the cash is not sufficient to meet the liability of TDS in respect of whole of such benefit or perquisite, then the person responsible for providing such benefit or perquisite shall, before releasing the benefit or perquisite, ensure my liability is not to deduct. If I am paying in cash, if I am paying in money, my liability is to deduct. But if I am paying in kind, my liability is just to ensure that the other person has paid the tax on that benefit and perquisite. He will pay the tax, he will show me the challan, and then I will give the benefit. Okay. Now, what is the timing of deduction? So, the timing of deduction over here is before releasing the benefit or perquisite. At any time before releasing the benefit or perquisite, you have to deduct the tax. And one last thing over here, which is very, very, very important now. The CBDT has said that in application of this section, if there is any difficulty, we will come up with a great circular. So CBDT has come up with a great circular, a very big circular, which is covered in book 2. I am doing it right now itself, right now, because then it is fresh now. Where the CBDT has given a lot of FAQs, around 8 to 9 frequently asked questions have been answered. So there are a lot of questions which is going to come now, which I'll be addressing now immediately after this. Okay, so I request you all to go through this provision once at your end properly, and then we'll move ahead with that circular, and then we'll move ahead with the next part of this chapter. Okay, so now this circular is extremely important for exam. The last 2-3 things which we have done were not very important, but this one is extremely important. As you all might be knowing that there is one new section which is introduced by the government in Finance Act 2022 itself. 194R. Okay, pay absolute attention. What is 194R? We have done that in the chapter of TDS. You might not remember that, but we have done that. You can go and check the chapter of TDS. So what is 194R? If you are giving any benefit or perquisite to anybody, okay, and if the other person is a resident, you have to deduct TDS at the rate of 10%. Okay, so you are a payer and the payee is resident. If the payer is giving any benefit or perquisite, then deduct TDS at the rate of 10%. So the CBDT has given a long FAQ on this, discussing each and every aspect of this section in detail. The first question which is raised over here is the payer supposed to see that the benefit or the perquisite which I am giving to the payee is taxable under section 28(4)? Is the payer supposed to see that? Or the payer is liable to deduct TDS on any benefit or perquisite, whether taxable under 28(4) or whether taxable under other section, or whether it is even not taxable, then also deduct the TDS. Be very careful. Be very careful. There are various kind of sections under income tax law. This is a very, very, very important circular for your exams. So pay absolute attention. We will go into the depth of this circular. the way we have gone into the depth of the circular of virtual digital asset. Be very careful about it, okay? The question which is raised over here, the first question, the government has said that you have to deduct TDS on benefit or perquisite if you give to some other person. Okay. The question which is raised over here is whether the benefit and perquisites will cover only those benefits and perquisites which are taxable under section 28(4) under PGBP, or it can be any other benefit or perquisites which are taxable under any other section, or it will also include those perquisites and benefits which are not even taxable. So there are two types of sections under income tax law. Let me give you an example. One is section 194E, which is about non-resident sportsmen. One is section 195, which is generally for non-residents. In this section, it is specifically written that the other person's income has to be chargeable to tax in India. Then only deduct TDS. It is specifically written over here. But here, it is not specifically written. Always deduct TDS. There is nothing written over here in 194E that you have to deduct TDS only if the sportsman income is chargeable to. Nothing is written. Nothing is written. So, what has to be done in 194R? Let's see. Is it necessary? Read the question very carefully. The same to same question will come in exam. Let me tell you. Same question will come in exam. Same to same question will come. Is it necessary that the person providing benefit or perquisite needs to check if the amount is taxable under 28(4) of the Act before deducting tax under 194R? No, no, and no. You're not supposed to check all those things. The deductor is not required to check whether the amount or benefit or perquisite that he is providing would be taxable in the hands of recipient under 28(4). The amount could be taxable under any other section like 41(1), etc. 194R of the Act casts an obligation on the person responsible for providing any benefit or perquisite to a resident to deduct tax at 10%. Very important line is coming. There is no further requirement to check whether the amount is taxable in the hands of recipient or under which section it is taxable. There is no need to do all those things. Moral of the story. What is the moral of the story of this question? The moral of the story of this question is very simple. If I am giving you any benefit or perquisite, whether it is taxable under PGBP or it is taxable under other heads, or whether it is even not taxable, if I am giving you any benefit or perquisite, it is my duty to deduct tax. That's it. Whether it is taxable or not taxable or taxable in this section or that section, it doesn't matter. Even if it is not taxable, you have to deduct TDS. This is the ultimate conclusion. Such requirement is there in 195. Yes, in 195, you have to check the other person income is taxable. Further, such requirement is not there in 194E for non-resident sportsmen. This is what I have explained to you through this particular discussion. Is it clear? Just go through it. Every question has to be done with me only, and then only I'll go with the next question. Question number 2. Is it necessary that the benefit or perquisite must be in kind? Is it necessary? The answer is no. If the benefit is in cash, deduct TDS. But if the benefit is in kind, there is a special proviso in section what? 194R. What is the proviso? If I am giving you benefit in kind, then I will not deduct TDS. I have told you earlier also. If I am giving you benefit in kind, I told you in the chapter of lottery also, winning in kind. Then what is my obligation? My obligation is to ensure that you have paid the tax. And then only I will release the benefit. Then only I will release the perquisite. First I will tell the payee, go and pay the tax, show me the challan. Then I will release the winning. So it is not necessary that the benefit has to be in kind or cash. It can be in any form. If it is in cash, deduct TDS. If it is in kind, ensure that the other person has paid the tax. Check. tax under 194R of the Act is required to be deducted. Whether the benefit is in cash or in kind is required to be deducted, whether it is in cash or kind. Okay, and this proviso tells you that you have to ensure that the other person has paid the tax. Okay, check. Question number 3. Is there any requirement to deduct tax under 194 of the Act when the benefit or perquisite is in the form of a capital asset? So the benefit which I am giving you, if that is your capital asset. For example, I am giving you a land. Land is a capital asset. Now the CBDT has mentioned car also over here. Car is not a capital asset. This is a mistake by CBDT. By default, personal movable car is not a capital asset. Yes, business movable car is a capital asset. But if it is a personal movable car, then it is not a capital. This is the example given by CBDT, which is wrong. So now coming back to the question. Am I supposed to deduct TDS if I am giving you benefit, which is a capital asset? I am giving you jewelry in the form of benefit. I am giving you painting in the form of benefit. Yes, you have to deduct TDS. This is what it is mentioned. You don't have to check the nature of the asset. Check. The nature of the asset need not be checked. Whether the nature in the hand of the other person is a capital asset or a revenue item, you have to deduct TDS. You don't have to even check whether it is taxable or not taxable. Forget about whether it is a capital asset or not. You don't have to check the taxability also. Still, you have to deduct TDS. Forget about being a capital asset or not being a capital asset. You have to deduct TDS. Check it, please. Just read it once. Now the next question number 4 is a big one. There are a lot of small points over here. I'll try to explain them with the help of an examples. Whatever is given over here, we'll go very slowly with it. It's a big question having a very big answer with a lot of examples given. Whether sales discount, cash discount, rebates are benefit or perquisites. For example, if I give you a sales discount, for example, I am a teacher. Okay, and you are a student, and suppose my fees is, for example, 20,000 rupees. But if I give you a discount of say 3,000 rupees, then whether this 3,000 rupees is a benefit which is provided by me to you, the answer is yes. Actually, yes. Actually speaking, yes, it's a benefit given by me to you. But in that case, am I liable? Because I am giving you a benefit of 3,000 rupees in the form of discount. Am I liable to deduct TDS on this? The government has said no. Because in that case, there will be a practical difficulty. There will be a lot of practical difficulty in what? In deducting TDS in such cases. So the government has clarified that there is no need to deduct TDS in such cases. Okay, pay attention. Whether sales discount, cash discount, that will be practical. In that case, so everybody gives discount to some or the other person. You go to the mall, you buy something, they are giving you discount. You go to the shop, you go to the grocery shop, he is giving you some discount. So everybody will start deducting TDS only or what? It will be very practically difficult to apply this. Whether sales discount, cash discount and rebates are benefit or perquisites. To remove such difficulty, it is clarified that no tax is required to be deducted under 194R of the Act on sales discount, on cash discount, on rebates allowed to customers. If you allow all these things to customers, there is no need to what? There is no need to deduct TDS. It cannot be considered as a benefit or perquisite given to the customer. There could be another situation. So this is the first part. Now this is the second part. There could be another situation where a seller is selling its item from its stock in trade to buyer. Okay. The seller offers 2 items free with the purchase of 10 items. So I tell you, if you buy 10 items, I'll give you 2 items free. Am I supposed to deduct TDS on those 2 items? Because 2 items I'm giving you as a benefit or perquisite. In substance, the seller is actually selling 12 items at a price of 10. Actually. Let us assume that the price of each item is 12 rupees. Okay. So one pen is sold for 12 rupees. Now I am telling you, I'm a seller. Let me give you an example. I'm a seller. Cost per pen is how much? Rupees 12. You are a buyer. And I'm telling you, I'm giving you an offer. Buy 10 pens and I will give you 2 pen free. So you'll pay me how much for 10 pens? 10 into 12 rupees, 120 rupees. So in 120 rupees, he is getting how many pens? Actually, he is getting 12 pens. Okay. So he has paid actually me how much? 120 rupees for 12 pens. So the 2 pens which I am giving him free. It happens now in mall also. Buy 2, get 1 free. Happens or not in malls? Go to a shopping mall, you see the offer is going on. Diwali offer, New Year offer. Buy 2, get 1 free. That one which he is giving you free is not actually free. It's included in the cost of 2, obviously. The 2 pens which I am giving you free is included in the cost of 1 pen. It's included in the cost of 10 pens. So am I liable to deduct TDS on that 1 pen or 2 pen or 1 shirt? Again, they have said no. No need to do. In this case, the selling price for the seller would be 120 for 12 items, obviously. For buyer, he has purchased 12 items at a price of 10, just like seller. The purchase price for the buyer is for 12 items 120 and is expected to record so in the books. In such a situation, again, then could be a difficulty in applying the provisions of 194R. And to remove difficulty, it is clarified that on the above facts, no TDS is required to be deducted. It is clarified that, now very important line, the situation is different when the free samples are given and the above relaxation would not apply to situation of free sample. So if I am giving you absolutely free sample, then I am liable to deduct TDS. That is a different situation altogether. So when I am giving you discount, 1000 rupees item at 800 rupees, no TDS. When I am giving you buy 2 get 1 free, no TDS. But I am giving you all 10 items free without buying anything, then it's a free sample. There is a difference between the first example and this one. If I am giving you all 10 items free, then it's a free sample. Then TDS is applicable. So relaxation is only for these 2 cases. Don't extend this relaxation to other items as it is written in the circular itself. Similarly, this relaxation should not be extended to other benefits provided by the seller in connection with sale. To illustrate, the following are some of the examples of benefits or perquisites on which tax is required to be deducted. Tax is required to be deducted. The list is not exhaustive. It is just illustrative. Only in 2 cases the government has said do not deduct TDS. Where you are giving discount. Where you are giving buy 2 get 1 free. Apart from that, deduct TDS. Like in these cases, you have to deduct TDS. Where a person gives incentives in the form of cash. I am giving you cash incentive. I am giving you car. I am giving you TV, computer, gold chain, mobile phone as an incentive. I am liable to deduct TDS. Where a person sponsors a trip, I am sponsoring you a trip. I am telling you, do this for sale for me. I am telling the websites like Lecturewala, like Zero in Fee, like Conferenza. These are my official website owners. If I tell them, if you sell 100 lectures in 1 month, I'll give you a foreign trip. I'll give you a foreign trip. That is taxable. I'm providing free ticket for an event. For IPL, etc., I'm giving you free ticket. That is taxable. I'm giving free medical samples for medical practitioners. The pharma company is giving what? Free medicine to the doctors as a medical sample, taxable. The above examples are only illustrative. The relaxation provided from non-deduction of tax for sales, discount, rebate is only for those items and should not be extended to others. This should not be extended to others. Only 2 cases where you are giving discount, rebate, or where you are giving buy 2 get 1 free. Then only relaxation is there. Let's talk about further points. It is further clarified that these benefits or perquisites may be used by the owner, yes, director, employee, or their relatives who in their individual capacity may not be carrying on business or profession. For example, I am giving a benefit to Mukesh Ambani. Okay. Actually, I am giving benefit to Reliance Industry, but Reliance Industry cannot take that benefit. Now, that is an artificial person. So, the benefit of what? Foreign tour is taken by Mukesh Ambani. Suppose my classes is a partnership firm. My partnership firm cannot take benefit. My partners can take benefit. That's what they are saying. However, tax is required to be deducted by person in the name of the recipient entity. So I have to deduct TDS in the name of Reliance Industry, in the name of the partnership firm, in the name of the company, not in the name of Mukesh Ambani, even though the benefits are taken by Mukesh Ambani, Nita Ambani. In the usage by the owner, director, employee, relatives by virtue of the relation with the recipient entity, in substance, the benefit of perquisites has been provided by the person to the recipient entity. So if I am giving a benefit to a particular person, so why I am giving benefit to that person? Because that person has a relationship with that entity. So if Reliance Industry has done something good for my business, I will give a pen to Reliance Industry. What will Reliance Industry as a company will do with that pen? I have to give that pen to Mukesh Ambani only, na? So I have to deduct TDS in the name of what? In the name of company only, because Mukesh Ambani is getting that pen from me because of the company. That's what it has to say. Further, to illustrate, free medical sample may be provided by company to doctor who is an employee of the hospital. Okay. So I am a pharma company. I am giving to doctor a free medical sample. Okay. Why I am giving to doctor? Because doctor is an employee of the company, of the hospital. The TDS under 194R of the Act is required to be deducted by the company in the name of the hospital, as the benefit of perquisite is provided to doctor on account of him being what? The employee of the hospital. I have to deduct what? The TDS in the name of the hospital only, because employee, the doctor is nothing but an employee of the hospital. Hospital does not have hands. Hands are with the doctors. They are going to give medicines to the people, to the patients. So if I am a pharma company and you are an hospital and there is an employee doctor, if I am giving some free medicines to the doctor, I will deduct TDS in the name of the company, that is in the name of hospital. Thus, in substance, the benefit of perquisite is provided to a hospital, obviously. The hospital may subsequently treat this benefit of perquisites as perquisite given to its employees. Now, again, another new angle. I am giving the benefit to hospital, and then hospital can treat that they have given that benefit to what? Doctors. So I will deduct TDS of hospital and hospital will deduct TDS of doctor, because doctor is an employee and the hospital is giving those medicines to the doctor on behalf of me. Listen carefully. Very, very important. I am a pharma company. I am giving medicines to doctor who is an employee. But I am not giving to doctor. I am actually giving to hospital. So under 194R, I will deduct TDS of hospital, and then hospital can deduct TDS under section 192 of doctor, because doctor is an employee, and this can be treated as what? Perquisite given by hospital to its employee. Okay, this is what it has to say. Check. If a person who is employee under section 17 of the Act and deduct tax under 192, in such a case it would be first taxable in the hands of hospital and then allowed as an expenditure as salary. Then ultimately the amount will be taxed in the hands of the employee and not in the hands of the hospital. Hospital can get the credit of the tax deducted under 194R by furnishing its tax return. It is further clarified that the threshold of 20,000 rupees in the second proviso to 194R, in 194R there is a threshold of 20,000 rupees. If the benefit is more than 20,000, then only you are supposed to deduct TDS. Okay, is required to be seen with respect to the recipient entity. Similarly, the tax is required to be deducted under 194R. Now, suppose the doctor is not an employee but working like a consultant. There are two types of doctor. One doctor is working like an employee in the hospital. Another doctor is working like a consultant, means a third party. What has to be done? In that case, the benefit of perquisite provider may deduct tax under 194R with hospital as a recipient, and then hospital may again deduct TDS under 194R of the consultant. Why? Why? Reason is very simple. Pay attention. I'll just make a simple chart. This is a pharma company. And there is a doctor. Now we have to see, and there is a hospital. So when the pharma company will give the medicines, free medicines, 194 hour. And when the doctor will, when the hospital will give the medicine to doctor, and if the doctor is employee, and if the doctor is consultant. If the doctor is employee, section 192. If the doctor itself is a consultant, then section 194 are again. Okay, under the current section itself. Okay, you can take a photograph of this if you want. Okay. Now, to remove difficulty, as an alternative, the original benefit or the perquisite provider may directly deduct tax under 194R of the Act in case of consultant or recipient. So the government has given one more option over here. One more option is what? Instead of you directly first deducting the tax of hospital and then hospital will again deduct of consultant, pharma company can directly deduct under section 194R for consultant. That can also be done. They can directly also deduct the TDS of the consultant. That is also an option which is given to them. One last thing, you are not supposed to deduct TDS in case the hospital is a government hospital who is not carrying on what? Any business or profession. Okay. So there is only one relaxation when it is given as a discount, rebate, or buy two get one free. No TDS. Otherwise, in most of the cases, you have to deduct TDS. In case of hospital, you have to deduct TDS. Hospital will deduct TDS of the employee doctor and also of consultant. And the pharma company will deduct TDS of hospital. Secondly, one more thing is there, whereby if I am giving benefit to Reliance to Mukesh Ambani, I will deduct TDS not of Mukesh Ambani but of Reliance. If you are giving benefit to Aarish Khan classes and me, you will deduct TDS in the name of Aarish Khan classes, not me. Because the recipient entity is a partnership firm and company and not an individual. Okay. So this is what this provision is all about. Just go through it once and then we'll move ahead with the next question. Okay. Now the next question will be, when you provide any benefit or perquisite to any person, suppose if I am providing this phone to you, okay, as a benefit or perquisite, how will I value that? So the government has said that you have to value how the valuation of benefit or perquisite will be carried on. The government have said that you have to take the fair market value. Okay, by default, fair market value, but except in following cases where you have purchased that item. Suppose if I have purchased this phone for 50,000 rupees, then rupees 50,000 rupees, the purchase price will become the price at which you will deduct the TDS. Or suppose if I have not purchased this, but I have manufactured this, then the price at which you charge to customer, that will be the price. So by default, you have to take the fair market value. But if you have purchased and then you are giving, then purchase price. If you have manufactured and then you are giving that benefit or perquisite, then manufacturing price. Further, GST will not be included for the purpose of valuation. So you are not supposed to deduct TDS on what? The GST portion. As you generally do not deduct TDS on GST portion while deducting the TDS. Okay. Just check it once. Now the next question is a very, very important question and a very practical question. There are so many companies who give what? Sample product to social media influencer. Like for example, suppose Samsung has given a phone to a tech reviewer. So this phone which is given to tech reviewer, will this be subject to TDS? Now that depends upon. If the reviewer returns the phone, after reviewing he is returning the phone, then no TDS. But if he is keeping it with him, he is not returning, then deduct TDS. Because if he is returning the phone after reviewing it, then there is no benefit given to the person, na, to the reviewer. But the company is saying review the phone, keep it with you. Then you have to deduct TDS under 194R. This is what question number 6 has to say. Check it once, all of you. Read. Read it. Okay. The next one is with respect to out-of-pocket expense. If you go for articleship, you might be knowing about what is out-of-pocket expense. Whether reimbursement of out-of-pocket expense incurred by service provider in the course of rendering services is a benefit or perquisite. Let me give you an example. Suppose there is a practicing chartered accountant who's in Mumbai and he has to go for an audit, say in Gujarat. So now if he is going to audit for a Gujarat, so he will be staying in a hotel. Okay. So he is staying in hotel. A hotel gave a bill to practicing chartered accountant and the bill is in the name of client. The bill is in the name of client. Okay. So what practicing chartered accountant did? The practicing chartered accountant paid the bill. Paid the bill and the client later on what? Reimbursed. Obviously, the practicing chartered accountant will pay the bill and the client will what? Will reimburse. And the bill is in whose name? Is in the name of the client. So in that case, is the client giving me any benefit or perquisite? The answer is no. This is not a benefit or perquisite. This is a part and parcel of my service. Without being staying in the hotel, I cannot provide you the service. And therefore, staying in the hotel is mandatory for providing the service. This cannot be subject to what? TDS. Check. This is what the government has to. Sometimes the invoice of out-of-pocket expense is obtained in the name of the client and accordingly paid by the CA is reimbursed by client. So CA paid and the client reimbursed. In this case, since the expense paid by CA for which the expense is made is incurred only and exclusively for the purpose of rendering services, is only and exclusively for the purpose of rendering services to client, and then the invoice is also in the name of the client, then the reimbursement made by client being the service recipient will not be considered as a benefit for the purpose of 194R. No TDS. But if the invoice is not in the name of client and the payment is made by client, directly or reimbursed, it is the benefit or perquisite provided by client to CA. So the year, if you don't want the TDS to be deducted, the invoice has to be in the name of the client. The invoice cannot be in the name of the CA. The CA cannot make the invoice in his name. If the invoice is in the name of client and if the CA is making the payment and the client is reimbursing, no TDS. But if the invoice is in the name of the CA, then nothing can be done, then the TDS will be deducted. Just check it once. Okay. Now the next is also a very, very practical question. For example, there is a company and the company wants to keep a conference for dealers. Say there is a company. And the company wants to keep conference for what? Dealers or customers, to explain the importance of the product, how good is our product, how our product is better than our competitors, so on and so forth. Okay. So they are keeping some conference. For that, the dealers are staying in a hotel, they are getting some food to eat, etc. They are getting some leisures. So whether that will be considered as a benefit or perquisite or not. Okay, so let's see whether what the government has to say. The government is very precise about it. If there is a dealer conference to educate the dealer about the product of the company, a company has thousands of dealers. Because of the dealer, the company is standing today. Dealers are the one who are selling the product on behalf of the company. So the company has to educate them. For that, the company is keeping a conference. Is it a benefit or perquisite? The expenditure pertaining to dealer or business conference would not be considered as a perquisite for the purpose of section 194R of the Act in case where the dealer or the business conference is held with the prime object to educate dealers or customers about any of the following or similar aspects. Okay. What? So the company is explaining the dealers or customer new product being launched. If this is the reason why the conference is held, no TDS. Discussion as to how the product is better than others, that is the competitors. Obtaining orders from dealers or customers. Teaching sales techniques to dealers or customers. Addressing queries of the dealers or customer. Reconciliation of accounts with the customers. So if the company is providing dealer these benefits, then there is no need to deduct TDS. However, such conference must not be in the nature of incentive or benefit to select dealers or customer. It should be for all. It should be for what? It should be for all the customers and all the dealers. It should not be for selected customers. Secondly, in these cases, you have to deduct TDS. You have to deduct TDS. In the following cases, the expenditure would be considered as benefit for the purpose of 194R. Example, expenses attributable to leisure trip or leisure component, even if it is incidental to the dealer or business conference. So suppose if the dealers have come for the conference and you are giving them some leisure, say you are giving them spa. What is the need for spa when they are coming for a conference? What is the need for that spa? There is no need. So you are giving them a leisure. So the leisure which you are giving them, even though it is incidental to the dealer or business conference, it will be subject to TDS. Or if you are bringing family members along with you, why the hell you are bringing family members along with you? The company is giving the air tickets, etc. for the family members also. That will be subject to tax, TDS. Or if you are overstaying or you are coming before 10 days before the conference starts, that is also subject to tax. Check. If you are getting some leisure from the company, subject to TDS. Your family members you are bringing along with you, subject to TDS. If you are overstaying or you are coming to prior stay, the conference is going to start from 10th. You are coming already from 4th, 6 days prior. Why the hell you are coming? So the prior stay and the extended stay which you are getting will be subject to TDS. Okay, I hope it is clear. Okay. Question number 9 is very simple, which I have already explained you earlier. And question number 10 is similar to question number 6 of the previous question. If you see question number 6 of previous question, it will be exactly copy paste. Okay. I may not have to speak that. But yes, question number 9 I'll speak. Am I supposed to deduct TDS in case I'm giving a cash benefit? The answer is yes. If I'm giving a cash benefit, I'm definitely liable to deduct TDS. Am I supposed to deduct TDS if I'm giving a kind benefit? No, no, no. Then what am I supposed to do? I'm supposed to just ensure that the other person has paid the tax. The question is, how will I ensure? That's what it is answered over here. Let's check. Section 194R provides that if the benefit or perquisite is in kind or partly in kind and in cash is not sufficient to meet TDS, then the person responsible for providing such benefit or perquisite is required to ensure that the tax required to be deducted has been paid in respect of the benefit or perquisite before releasing the benefit or perquisite. How can such person be satisfied that the tax has been deposited? How will I ensure that the other person has paid the tax? So what am I supposed to do? That's what it has been answered over here. Such recipient would pay tax in the form of advance tax. So the recipient has to pay advance tax. The tax deductor may rely on the declaration along with the copy of advance tax payment challan provided by the recipient confirming that the tax required to be deducted on the benefit or perquisite has been deposited. So the other person will pay advance tax and will give me the challan. It is as simple as this. This would then be required to be reported in TDS return along with the challan number. Then I will report that in the TDS return in form 26Q. In the alternative, as an option to remove difficulty, if any, the benefit provider may deduct the tax under 194R and pay the government. The tax should be deducted after taking into account of the fact that the tax paid by him as TDS is also a benefit under 194R. In Form 26Q, he will need to show it as a tax deducted on the benefit provision. Okay. So you have to take the advance tax challan from the other person. That's it. Nothing great as such. The next question which I have discussed with you all in the case of virtual digital asset. Because the section came from between, that is from 1st July 2022. How to count the threshold of 20,000 rupees? That I have told you. You have to consider from 1st April. The threshold will be counted from 1st April, but the TDS will be deducted only from 1st July payment. Okay. So this is what this question number 10 is all about. Okay. Just go through it. So after the discussion on that circular, I hope you all have enjoyed that discussion on circular which is there in your book too. Okay. Let's move ahead with some more amendments. The next amendment is in section 206 AB. Now this section was brought last year only. Now this year they have made an amendment. Now what does this section says? This section says that if the assessee, if the payee, I am the payer, you are the payee. If the payee has not filed the ITR of last 2 years and his TDS and TCS in the last 2 years is 50,000 or more and he has not filed the ITR of last 2 years, then the deductor has to deduct the TDS at twice the rate or 5%, whichever is higher. So what am I supposed to check as a deductor? That the other person, the deductee, the payee, if the payee has not filed the return for the last 2 years and the TDS and the TCS deducted and collected for the last 2 years is 50,000 or more, then I am supposed to deduct the TDS at twice the rate at 5%. But now the government has made amendment in 1 year. Now the government says that don't check for the last 2 years, just check for the last year. So now you don't have to check for the last 2 years, just check for the last 1 year. So if you are making the payment in 22-23, just check 21-22. Earlier we used to check for 2 years, but now only check 1 year. Secondly, just check in the last year if the TDS deducted and collected is 50,000 and more or what. If it is less than 50,000, then this provision is not applicable. If it is 50,000 or more, just in the last year. So the government has made a very simple amendment. Let me tell you. Initially, we have to check the compliance for the last both the 2 years, but now you have to check the compliance only for the immediately last year. That's it. This is the first amendment which is made in this section. A similar amendment is also made for TCS under 206 CCA. For TCS also there is a similar amendment. There also they have removed the word to. The word to is removed and they have said only last year. Whenever that section will come, I'll show you that. Now the second amendment. This section is not applicable to certain assessees, to certain sections. This section is not applicable if you are deducting TDS in 192, 192A, 194B, 194BB, 194 LBC, 194 N. But now they have made few more additions to this particular exclusion. So now this section is not applicable to 194 IA also, which is for TDS on immobile property. This section is not applicable for 194 IB also, which is for TDS on rent. This section is not applicable for 194 M also, which is for TDS on certain contracts, certain professional fees and commission where the payment is exceeding 50 lakh rupees in a financial year. So now the exclusion has expanded. These are the 3 more sections where this provision is now not applicable. Okay. This is a small amendment. First amendment is earlier we used to check last 2 years whether last 2 years return is filed or not. Now you don't have to check 2 years return, only 1 year return is not filed. You can go for this section. But in these sections, you are not supposed to double the rate. You are supposed to follow the rate which is mentioned in the respective sections. Okay. Now the next amendment is given in section 2011A. 2011A, that is interest on default in deducting the TDS or delay in deducting the TDS, sorry, or interest on delay in paying the TDS. What is the interest on delay in paying the TDS? Paying the TDS 1.5%, deducting the TDS 1%. So there was uncertainty regarding who will determine this particular interest. Is the assessee going to determine how much will be the interest, or is the AO going to determine how much will be the interest? So finally, the government has clarified for both TDS as well as for TCS. For TDS in 201 subsection 1A, for TCS in 206C subsection 7, that it is the AO who is going to determine. It is the AO. 201 has been amended to make it clear what? That where any order is made by the AO for default under subsection 1 of said section, The interest shall be paid in accordance with the order. The interest shall be paid in accordance with the order made by the assessing officer in this regard. And similar amendment is also made for TCS. Check. The moral of the story is what? There was uncertainty regarding who will determine that how much interest is to be paid for delay in deduction, delay in payment. It is the AO who will make the order, and accordingly you will pay that much interest as per the order of the assessing officer. Just go through it once and then we'll move on with the next one. Now the next amendment is on page number 28.36 after 28.35 in section 206C1H. In section 206(1)(h), what happens when you sell goods of more than 50 lakh rupees to any person? You have to collect TCS, and the seller's last year's business turnover has to be greater than 10 crore rupees. Then only this section is applicable. So last year's turnover has to be greater than 10 crore, and if you sell more than 50 lakhs to any person, to any buyer, then this section is applicable. Now the question over here is, in the definition of buyer, the government has excluded certain buyers. You remember that? If you sell to central government, do not collect TCS. If you sell to state government, do not collect TCS. These are excluded from the definition of buyer. You can check here. If you sell to embassy, any high commission, legation, trade representation, local authority. And the last one is any other notified person. So the government has notified any other person over here as. So this is an amendment. Non-resident. This is not an amendment made by Finance Act 2020. This is an amendment made through a notification. That is the reason you might not find this as green, because this is an amendment made in between of the year, not by Finance Act 22. So non-resident who does not have a PE. So if there is a non-resident who does not have a PE, is not a buyer. If you sell to such non-resident who does not have a PE in India, then you do not have to what? Collect TCS. But if you sell to such non-resident who has a PE in India, like Standard Chartered Bank, like Citibank, like Microsoft, they have PE in India, then you have to collect TCS. Check it once. So they have excluded from the definition of buyer a non-resident who does not have a PE in India. Check it once. Okay, you can write this over there if you want. Then we'll move ahead with the next one. Page number 28.38, next amendment. As I've told you earlier that there is a similar amendment is made in 206AB. Here also there is a similar amendment. For TCS also you have to twice the rate or 5%, whichever is higher. So here also earlier we used to check whether the assessee has filed the return in the last 2 years or not. But here also they have made, you have to now check only in the immediately last year. Don't check 2 years, only the last year. Don't check whether in the 2 years 50,000 is crossing or not. Just check only in the last year if 50,000 is crossing or not. Just check it once. Now the next one is virtual digital asset. Now on this I'll be putting a complete lecture. Don't worry. Complete lecture means what? Because this is a completely new concept. I have to put this entire discussion. I'll be teaching you from the textbook. I'll also put the soft copy of my textbook of regular batch, because I have to do some detailing over there. Then you can revise from here. There is no issue. Everything is covered here also. Then I will also go to book 2, because there is one very recently introduced one circular. There is one chapter 76 in your book 2, where I have put all the latest circulars so that you can pay special attention on that. Then I will also go to question bank, and then I will solve some questions based on virtual digital asset. What is virtual digital asset? It is nothing but what? A cryptocurrency. The cryptocurrency taxability has been introduced by Finance Act 2022, which was missing earlier. So that we will address in a separate amendment lecture. The way we are going to address in what? A separate. Immediately, tomorrow only I'll put. Don't worry. Today you see this lecture, tomorrow you will get the next lecture. And then day after tomorrow you will get the next lecture. In 3-4 lectures, we'll try to wrap up all the amendments which are covered by Finance Act 2022. Okay. Now the next amendment is with respect to capital gains. In slum sale, they have made a small amendment. This is not an amendment. In fact, this is a rectification of a mistake. You all might be knowing that in the last year, the government has expanded the definition of slum sale. Last year only they have made an amendment in the definition of slum sale, if you remember. Sir, how, sir? Earlier in slum sale, there was only sale covered. Exchange was not covered. Relinquishment was not covered. Extinguishment was not covered. So they said that no. Sale will include slum sale will not only include sale but include all kind of transfers. Okay. So they made this definition. Slum sale means earlier it was sale of one or more undertaking. So they removed the word sale and they put the word transfer. Okay. But at the end they forgot to remove the word sale and put the word transfer. So there was a defect in the definition. Check. So what was the definition earlier? I'll just tell you three definition. What was the definition before 2021? It was like this. Slum sale means sale of one or more undertaking. What was the definition after 2021? It was like this. And what is the definition after 2022? They have removed the word sale from here and there also they have put the word transfer. They don't see the provision or what properly. Before making an amendment, they don't read or what? I don't think so. They should make such kind of silly mistakes in income tax law. Yeah. You have a team of thousands of people with you. You have a lot of committees. You have resources. You have money. You have time. You have everything. You have 1 full year to amend a lawyer. How can you make such silly mistakes? But ultimately, this is what human is all about. You all are humans ultimately. Law is not amended by a computer. It is amended by humans. So mistakes are bound to happen. So the government made a rectification of this mistake by removing the word sale and by putting what? The word transfer over here. Apart from this, there is no other amendment made over here. The rest of the things are already amended in the last year, if you remember. Okay. So they have brought some Rule 11 UAE last year. To value what? To value full value of consideration. All those things are the major amendments which has happened in the last year. So just go through it once and then we'll move ahead with the next one. So the next amendment is on page number 34.12, 34 after 34.11, 34.12, and the amendment is in section 10(4)(d), whereby the government gives some exemptions to certain specified fund, and the term, there are 4 exemptions which are given to specified funds, and the definition of specified fund is mentioned over here. In this, there are 2 types of specified fund. One is this category, another is this category. In the second category, there is no amendment. There is an amendment in the definition of specified fund in the first category. So I'll just read the definition and then I'll explain you the amendment which is made by the government of India over here. Okay. Who is a specified fund? A fund which is established or incorporated in India in the form of a trust or company or LLP or any kind of body corporate is called as a specified fund. Okay. Now, which has been granted a certificate of registration as category 3 AIF. Okay, so they have been registered as a category 3 AIF and is regulated by SEBI under the SEBI. Okay. Is this condition amended? No, no, this condition is not amended. Which is located in IFSC. Is this condition amended? No. This is same. The condition number 3 is amended. All the units are held by non-resident. So the fund has suppose 100 units. All the units have to be held by the non-residents other than the units held by the sponsor and manager. So sponsor and manager can be residents. They are allowed to be resident. Sir, who is sponsor? Sponsor is the person who has started the fund. Maybe the promoter of the fund can be called as a sponsor. Sir, who is the manager? Manager is the person who is managing the funds. Maybe the fund manager of the fund can be called as a manager. So the promoter, that is the sponsor, and the fund manager, that is the manager, can be resident. Rest of them have to be non-resident. Now, there is a relaxation given to this condition. So the government has given some relaxation to this condition subject to some condition. The relaxation is not unconditional. The relaxation is conditional. So relaxation is conditional to what? Let's see. Just wait. The aforesaid provision have been amended with effect from AY 22-23. After the amendment, the condition 3, that is this one, shall not apply. Shall not apply. The condition 3 shall not apply where any unit holder was non-resident during the previous year when the unit or units were issued, but he became resident under section 6(1) or 6(1)(a) in any subsequent year. So, however, this concession will be available only if the aggregate value and the number of the units held by such resident unit holder or holders do not exceed 5% of the total units issued and fulfill such other condition as may be prescribed. Now, let me explain you this with the help of an example. Okay. So, there is an example over here which I'll just explain you over here. I have made one example for you all over here. So, suppose. Pay attention. This is section 10(4)(d). This is specified fund. This is previous year 22-23 and 100 investors are there. Each investor invested rupees 1 lakh. Therefore, the fund will get how much? 1 crore rupees. Okay. Now, all are non-resident in the year of issue. The government says that in the year of issue, they are supposed to be non-resident. In subsequent year, they can become resident. But in subsequent year, they can become resident unconditionally. No, no, no. The condition is not more than 5% of the investor and not more than 5% of the value should be resident in the next year. So in the next year, if out of 100 investors, suppose every investor has bought 1 unit. So out of 100 units, if next year, if 5 unit holders become resident and up to 5 lakh rupees if they are resident, then it is okay. Because the government has put a condition over here that this concession will be available only if the aggregate value, condition number 1, the aggregate value as well as the number of units held by such resident unit holder do not exceed 5% of the total units issued and fulfill such other conditions as may be prescribed. So be very careful. This condition says what? This condition says what? In the year in which you issue, in that year the investor has to be non-resident. But in the subsequent year, to the extent of 5% can convert themselves into resident. And that 5% has to be checked at both the points. The number of units should also not exceed 5% and the value of investment should also not exceed 5%. Just check it once. This is what this particular provision has to say. You can take a photograph of this if you want. Okay, I hope it is clear to all of you. Okay. Now there is one more amendment which is made over here only, which is made in section 47 now. Now what is that amendment? In section 47, here original fund to resulting fund. Now what is this exactly? I'll just try to explain you. There is one rule which is prescribed by the government. I'll just try to explain you this also. Pay attention please. So last year the government has brought this provision where there is an original fund which is outside India. And there is a resultant fund over here. Now the government says that if this original fund, if you shift to India, a resultant fund is in India, then we will give you relaxation in capital gains. No capital gains on transfer of asset, no capital gains to the unit holder, so on and so forth. So there are a lot of relaxations given by the government over here. Okay. Now there are some amendments made by the government over here in the definition of, pay attention please, there are some amendments made by the government in the definition of the original fund. Now, who is an original fund? As I have told you, it is outside India. Listen carefully. So they have made some amendment in the definition of original fund. Original fund means a fund established outside India. As I have told you, the fund is outside India. The government is encouraging them to come to India. It collects funds from the members for investing and fulfills the following condition. First, the fund is not a person resident in India. It should be outside India. The fund is in such country with which India has a DTAA. That is also a criteria. This is condition number 2. The fund is in such country where there is an investor regulation protection. Like in India, we have investor regulation protection issued by SEBI. So in that country also, there should be someone like SEBI who is controlling them. Okay. And the fourth one, pay attention, fulfills such other condition as may be prescribed. So the government said that the government will prescribe few more conditions. So the government has prescribed the condition under Rule 21AL. So to fulfill this point, the government has brought Rule 21AL. And now what does Rule 21AL says? It's a very simple amendment made by the government through a insertion of a rule. Rule 21AL prescribes that aggregate participation or investment in the original fund. So the aggregate investment in the original fund by the person resident in India shall not be 5% of the total corpus. It means the fund which is there outside India, in that fund, the condition number 4 says that, which is prescribed through Rule 21AL, it says that the fund which is there outside India, in that the Indian resident should not be more than 5%. If the Indian residents are more than 5% in the original fund, then the fund cannot be called as original fund, because then the condition number 4 will be violated. So if the condition number 4 has to be fulfilled, the condition number D or 4, whatever you want to say, has to be fulfilled, you have to fulfill what is written in Rule 21AL. And Rule 21AL says that the original fund which is there outside India, in that the investment of Indian residents should not be more than 5%. So if the Indian residents are up to 5%, we consider that as a compliance of condition number 4. But if the Indian resident exceeds 5%, then condition number 4 is violated. If condition number 4 is violated, it cannot be called as original fund. And if it cannot be called as original fund, you will not get the benefits mentioned in section 47. Just check it once. So here we complete all the amendments of book 1. And I'll tell you the roadmap for the subsequent amendment lectures for how it will be done. So book 1, all the amendments are done now. Book 2 amendments are pending. And now what will come next? Next, I'll put income escaping assessment lecture. I'll put, don't see the last part. Last part I will not put, only I will edit and put only the amendment part. I'll not put the entire part. Okay. Secondly, virtual digital asset will come, which is there in your book 1 color book. And then circular will come, which is there in book 2. And then question bank, we will be doing questions on what? Cryptocurrency, how cryptocurrency taxability will be done. And then I'll be putting one more lecture on updated return, which is mentioned in 139.8a. So this is the roadmap for the subsequent few days. You do that much. Till that time, I will record book 2 lectures. Book 2 amendments I will record, and then that will complete all the amendments for you all. Once I upload, after this only one lecture will come, that is book 2. Book 2 amendments. Once I put that book 2 amendments, then rest of the things will be done. Okay. Once the amendment lectures are done, I'll be also putting from next month onwards, that is from February onwards, I'll also be putting the revision lectures in full English. Don't worry for you all, the way I have put it for November 22. So I'll be putting the revision lectures also for November 22 students from next month. So I hope you all have enjoyed the lectures. If you have enjoyed the lectures, share these lectures with all the students across South India, in all the states, with all your friends. I'm trying my best that whatever I do for Hindi batch, I will try to be at par with for the English batch as well, because I don't want to be having any disparity between two kind of students. Okay, so I'll try my best that whatever I do for my Hindi students. Generally, I'm a Hindi speaking person. I don't know much English. I don't know whether I speak good English or not. You can only tell me by putting a comment in the comment box whether I speak good English or not. But still, I have tried my best to speak in English, to explain in English, and to cover maximum syllabus in English. And now even I have my full batch in English, full regular batch in English. I have got great response from the students across South India. And I have also a fast track batch in English. For that also I've got a great response. Thank you very much for that also. Take care all of you. If you need any other help, any further help, I am always there for you all. Take care. Bye all of you.